The withdrawal of one of their filings for use in first line.
I will show you how to get the best funding for your startup idea.
To long-term sales estimates, so we'll watch for impact there. We're also looking at Bayer. They have lowered their earnings guidance on wheat crop unit performance, and Infineon, they see sales declining as car chip demand struggles, a story guide that we know very well.
Absolutely. Look forward to maybe an AI story there, though. Right, here we go. Time for the opening trade. Time to take a look at exactly what Europe thinks of the equity market this morning. And generally, we're anticipating a negative picture to emerge. FTSE 100 first out of the gate. There you go. Some red on the screen. Then we get the IBEX. We're seeing some losses there as well. We're anticipating actually some fairly significant downside moves today. The IBEX is already delivering on that. To Critty's point, we're not necessarily seeing that in the FTSE 100 this morning. I'm interested to see how some of these drug stocks trade. BA Systems could be interesting. Shell could be a story. We've talked about that. Stock 600 down by 0.4%. I think it could take a while to get the DAX open this morning. I think there's some quite interesting stories there that could take a while to factor into our thinking. The CAC is already down by 1%. Critty, we'll wait for the DAX. What else is going on?
Well, the culprit for some of the red is actually your heavyweights here. No surprise. LVMH is taking a really big hit this morning, down about 2%, right alongside Novo Nordisk. And this is important. In futures trading, a lot of the French index, the French futures index, was seeing the most underperforms across Europe. It looks like that's reflected, at least in the early trades that we are getting, Anna. But it is that story of heavyweights. And tech, of course, also on the back foot here. When you look at your three worst, your biggest weights on the Stock 600, it's Novo, LVMH, and SAP.
That is interesting. Interesting that Novo Nordisk is so active today. We're going to talk about the pharma sector with Sam Fazeli a little bit later this hour, because, of course, we've got those numbers out of AstraZeneca. And in terms of the top line, there wasn't a great deal about the opportunities in obesity, but that is something that everyone's watching AstraZeneca for with the pill side of things as opposed to the injections. But AstraZeneca's share price is up by 1.8% then, so the market is responding to that upgrade to guidance. We'll see if we get any reflection on the other areas of disappointment that Bloomberg Intelligence were pointing to. But there we do see a bit of green. But broadly, the market is sort of opposite of yesterday. Yesterday we saw quite a bit of green. Today we just see red on the sectors.
Stock 600, there are 36 stocks that are higher. That probably tells you that there's 486 stocks that are lower.
And just flagging Basic Resources as one of the worst performers. We did start this programme with reference to China, and that's always a good thing to do on a day where we get some disappointing either commentary coming out of China or the stimulus measures fall in a disappointing way in China, which seems to be what we are constantly digesting right now. And so there's a weakness in the China trade, and that seems to be filtering through into some of the commodities this morning.
Are we at peak US, peak pessimism for Europe and China? Because at the moment, everybody's kind of waiting for the Chinese to deliver. That's not happening. Maybe they wait for the Trump trade to kick in, Critty. And maybe we're at peak pessimism when it comes to Europe as well. We don't necessarily see a massive pickup from here, but is this as bad as it gets? And is this peak US? Because it just feels like, and it's felt like this for a while, we're on different planets right now, the US versus the rest of the world.
But then I think the question is also, yes, that might be the dynamic, but then do you have a little bit of FOMO not being exposed to the US right now as kind of that hedge?
Or Bitcoin.
Or that is a longer conversation. Let's bring in an expert who might actually have the answers to the many questions we're posing. Louise Dudley joins us around the table, Global Equities Portfolio Manager over at Federated Hermes. Luis, walk us through this story. Are we at peak pessimism, as Guy says? Does it pay at the moment to be away or non-exposed to the U.S.?
So we wouldn't say we're definitely at peak US. I think the US for next year and beyond is actually looking very strong. And even within Europe, we're looking at companies that have that US exposure. The growth is just that much better. The only thing perhaps that maybe the European names have got for it is that as the growth outlook weakens, that we might see more cuts coming in, and that obviously does do something to kind of offset
ECB cuts.
Yes, exactly. Yeah.
Does the ECB cut have that much of an effect on the equity market? And I ask this in the context of tariffs, structural changes in German politics, French politics, no matter what comes out of Brussels, et cetera. Are cuts still the tailwind of Europe?
So I think it's, I guess, the relative bright spark out there. I think everything else, as you say, tariffs, negative. A lot of the other kind of factors, in terms of the ongoing geopolitical influences, the high energy prices that Europe is not able to kind of overcome, are going to continue to overhang for European companies.
Are you comfortable buying into US markets as expensive as they are?
Yes, we are. And, that's because there is that improved growth trajectory that's there. And we can see that, and we know that's still yet to come in with some of the expectation around reduced taxes. We are going to see some revisions. We've obviously just gone through earnings season. And so now we are going to see the market led by a lot of these geopolitical macro influences. But going into next year, we'll go back to those fundamentals, and maybe, some of those numbers will get that uptick.
Yep.
And that's going to come through strongly.
Is it inflationary growth? Because that's critical. If it's inflationary growth, then we maybe get the Treasury market reacting. Would Treasuries I'm talking about the 10-year here at 5% be a problem for the equity market? At what point is there a constraint on this growth story?
Yeah, I think, what we've seen from last earnings season is that we did see strong beats on revenues and earnings, but actually earnings were beating by more. And I think that's going to continue to be the focus going forward, that people will be focused on that bottom line. So then kind of less concerned about those inflationary numbers coming in at revenue level. But we are definitely watching what the Trump trade is going to cause for next year in terms of US markets, in terms of inflation, and then obviously how that impacts the cut cycle as we see it going forward.
Louise, we have the COP29 events taking place right now. You say in your notes that ESG is arguably more important than ever, and I can see where that comes from when you talk about the various climate events that we've witnessed of late. But looking at various measures of how much America is focused, at least on ESG, it doesn't look like perhaps it did a couple of years ago. If you look at the mentions by CEOs of the words ESG on earnings calls, they're just not there to the same degree they were a couple of years ago. If you look at search activity in America, it's held up elsewhere, actually, non-US. Searches for ESG have held up, but not in the States. It seems as if this even before Trump, this is a theme that's kind of fading. Is that your experience?
So, I mean, lots of people are talking about green hushing. So certainly US corporates less interested in talking to the market about what they're doing in terms of green ambitions, even kind of on the social side as well. But we are actually seeing that trajectory is continuing for corporates. So a lot of the spending around clean energy is continuing, and some of those ambitions, and I'm sure we'll see a greater step up from the COP as well, that green energy spending is continuing to permeate the market, and some of the best opportunities we think in terms of growth are some of those names, just because of the exceptional kind of trajectory that we have through to 2030. So you don't think the
US sets the mood for this sector?
I think they do, in the sense that we're going to continue to see this dampening in terms of the overall sentiment, but I think the underlying drivers are already there. But maybe we see less of a sudden flow into ESG assets as we saw, through 2020. But maybe we don't see so much of a pullback that we saw maybe in the last year or two.
What about defense stocks?
Sorry?
What about defense stocks? How are you thinking about it? Is it as simple as...
It's like the opposite of ESG.
Yeah, well, exactly. But I'm curious how much of that is a Trump trade, how much of that is a trading update, how much of that is German politics as well. What drives defense right now?
So absolutely, people think, within a Trump world, there is going to be more spending in terms of military. We know already that we're in a number of conflicts around the world. Those names have done well over the last couple of years. And to be honest, that is set to continue. But there's also lots of corporates who don't have direct military influence, but who are also benefiting from that spending. So the tech companies, for instance, have a lot of government spending. That is kind of indirect spend that isn't a defence company has said, but those are names that we can still invest in from an ESG perspective.
It's really interesting, though, that you have seen Europe is already blurring the lines. So it's starting to use cohesion funds. One of the reasons why defence stocks are trading strongly today is because Europe's basically signalling you can spend money out of the cohesion funds on defence. Europe's got to figure out a way to solve its problems. It's got a defence problem it's got to solve. Clearly, with Donald Trump coming in, that gets greater. It's got a welfare issue it's got to solve as well. It's got an immigration issue it's got to solve. How does it use the various funds? And the lines feel like they're getting blurred right now. What was ESG? Traditionally, you wouldn't think that cohesion funds would be spent on defence, but actually, in some ways, you can logically kind of consider that to be a way forward. But it does seem as if the lines are getting... And Europe is going to be right at the forefront of this. It's going to have to blur a lot of lines to get done what it needs to get done.
And arguably, we saw the boom in ESG when the lines were very blurry, and now they're being refined, I suppose, Louise. That's the direction of travel in Europe.
Yeah, and also we can look back to 2016 and what happened there, and I think, those trends actually, although there was a lot of kind of talk about the fact that it would be a very material impact, actually that wasn't the case. So I think, that is our expectation this time, that actually there will be the headline news about kind of things being more negative and additional spending, but the sense that it flows through is maybe less kind of overdone, I would say.
Louise, nice to see you. Thanks very much, Steve, for stopping by. Louise Dudley, Global Equities Portfolio Manager at Federated Home is. Let's talk a little bit about what we're seeing in the Core 6 this morning. This is what the picture looks like. We do have quite a lot of red on the screen. It's interesting that ASML is actually popping a little bit higher this morning, but the luxury stocks are under significant pressure. Is that a China trade? Schneider's also a little bit softer. Is that a read across from Infineon? I don't know. You've also got some of the defensive names. Look at Nestle, the staples, softer as well. But the one that really stands out to me is Novo Nordisk, down hard this morning, down by 2.42%. It's had a reason. There's been some more positive news recently, but this stock does seem to be quite volatile, and we don't know yet what the story is going to be. One of the areas we don't know yet in the States is what the healthcare story is going to look like, who is ultimately going to be put into some of the key roles there. Let's talk about some of the other single stocks we're watching. Joe's got all the details.
So we've got a big drop over in Germany this morning, Guy. Bayer now down close to 10%, down 9.6% at the moment. Remember, downgrading its outlook for agricultural chemicals, citing a decline in some of the farming markets that it sells into there. The actual pharmaceutical business looking okay. It is all about the chemicals business today. Bear in mind, as we said earlier, this stock was down around 40% on a one-year basis heading into this report, following a big profit warning around a year ago that it hasn't recovered once, so heading even lower for that stock today. Then one of the worst performers as well, this is in the UK for the luxury space. We got Burberry down another 5% today. Now, we did get headlines out of some press reports yesterday saying that a potential takeover by Moncler really isn't progressing, and those kind of rumours around that deal really aren't going to progress any further, according to the latest reporting on that. We have got general weakness in luxury today, given declines over in Hong Kong. Prada was down around 3%, as were the other rivals as well. Then in terms of your earnings here in the UK, couple of big ones, as we mentioned earlier. There's Astra, edging very slightly higher, only up 0.6%. Remember, down a lot over the past couple of weeks on those China probe worries. And then Vodafone, this one looking a bit weaker than I had expected. Now, a lot of the declines in some of their sales are over in Germany. That does seem to be the weak part of their business at the moment. The UK holding up okay, and Spain as well, their other big market. But it looks like Germany weighing on the stock, and that is a surprise drop for a company that tends to be pretty stable for Vodafone. Then over in software, a bit of a warning from Temenos. This is enterprise software. It was called down around 6% on TradeGate, currently down only 1.5%, potentially not as bad as expected, but a weak one in the tech space for Temenos today over in software. Then finally, we've done Astra, so we've also got GSK, a pretty big call from Jefferies. They have been a longer-term buyer on GSK, but they say that the vaccine outlook isn't strong enough to keep them buying the stock, even after the Zantac litigation situation did improve. So they downgrade that one after a long time being buyers, and that stock is down at 1.7% this morning.
Joe, thank you. Joe Easton from our equities team, keeping us on the case with individual stock movers this morning. Coming up, we'll talk about the ECB and the European rates landscape. We're going to be hearing from the Finnish Central Bank Governor and ECB Governing Council member, of course, Olli Rehn. He'll be talking about the markets, the ECB's rate path from here, and plenty more. This is Bloomberg.
Start your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
So the UBS European Conference kicks off today, bringing together key players from businesses, finance, politics. Bloomberg has exclusive coverage of the event where investors will discuss everything from geopolitics to central bank policy and, of course, AI. Bloomberg's anchor, Francine Lacroix, is now standing by with a great guest.
Guy, thanks so much. We're delighted to be joined by Olli Rehn, of course, the central bank governor of Finland. Thank you, Mr. Rehn, for joining us. There's a lot going on. We worry about possible tariffs against Europe from Donald Trump, but we also had some pretty good third quarter GDP results in Europe. What does it mean for monetary policy in December? Is a 50 basis point cut still on the table?
Well, we don't. We do data dependency, but not data point dependency. In other words, we have to make an overall assessment and look at the trends in inflation, in growth, in productivity, in wage developments. For the moment, we are preparing the next broad macroeconomic projection for December, and we have, in particular, three things that we are looking at. First, the inflation outlook. Second, the underlying inflation neutralized from energy and food prices. And third, the strength of monetary policy transmission. What I can say is that the direction is clear, but the speed and magnitude of rate cuts will depend on the incoming data and our analysis.
But, Governor, if you had to choose today, what would you do, given also the specter of tariffs from the U.S., which, frankly, we don't know the impact. We don't know when they'll come in place and how big they'll be.
Well, I think the critical things are indeed inflation and growth outlook. And if you look at inflation, disinflation is well on track in the Eurozone. At the same time, we see that the growth outlook, despite the better figures in third quarter, have weakened, even deteriorated, especially because the manufacturing sector is in difficulty. So if it is confirmed that, if it will be confirmed that disinflation indeed stays on track, and if growth outlook seems to be weakening, that strengthens the case for a rate cut in December, in my view.
50 basis points or 25? Or again, then you have the tariffs from the US. So is that automatically inflationary, or could it hurt growth into the second quarter of next year?
I think it's important we maintain freedom of action, so I don't take any exact stand on a certain number. We know both the market data for the moment, market expectations, on the basis of which we could be leaving the restrictive territory sometime in the spring-winter of next year, 25. As far as the tariffs are concerned, it's too early to tell what are the specifics of U.S. trade policy of the incoming administration. We know that there will be tariffs in the verbal pipeline spoken of, but we don't know exactly what kind of, and of course Europe will not be caught off guard this time like last time. Europe will have to give its response, and then we will see whether there is some kind of a negotiating process. The last thing we need now with the geopolitics in very tense situation, war in Ukraine, Russia's illegal war, Middle East burning, the last thing we need now is yet another trade war, especially between allies.
But Governor, what do you mean by Europe will not get caught off guard? Is it a negotiation with Donald Trump if he does want to impose, or do you think Europe as a whole is just more ready to face extra tariffs?
What I mean is that the European Union has a thing called common trade policy, and the European Commission has quite strong lead on that, of course with the support of the member states. So the European Commission has prepared scenarios over different versions depending on what policy of the United States will be, and it simply means that we cannot kind of stay on the ground and be beaten, but we have to respond and do it smart, do it wisely, and preferably both the European Union and the United States should avoid a trade and tech war especially between the two allies in the current tense geopolitical situation.
But could you see the trajectory of monetary policy changing because of these tariffs? Would there be, for example, less focus on services inflation? That's been one of the big worries of the central bank.
Service inflation is a concern that's related to wage growth, and wage growth has moderated, although it's still somewhat elevated. Concerning the timeline of the effect of U.S. tariffs, that's going to be medium to long term, and we can only react in monetary policy to economic and developments we know and we see and we feel, and then we react on the basis of our price stability mandate, looking at how best achieve our symmetric inflation target of 2% over the medium term.
Will that be easier to achieve?
Well, in my view, geo-economic fragmentation and higher tariffs, protectionism is by definition inflationary. It would be probably more inflationary in the United States, combined with expansionary fiscal policy supported by tax breaks. But it would have a detrimental effect of the whole world economy, including Europe.
Governor, you mentioned these projections that are coming out in December. I know the market are really, waiting to see exactly what it means because they're longer-term projections towards 2027. What do you think you'll see in them?
Well, I prefer to see empirical evidence. We are currently still collecting data. The method is that the ECB economists do the top-down European forecast. The national central banks provide analytical raw material from their own countries. So it's a combination of top-down, bottom-up, and then you iron out loose ends. So it's, I think, one of the most meaningful products of the projection and forecasting process. And I'm very much going to look forward to what kind of data it will provide concerning wage growth, what kind of data concerning productivity, as well as, of course, inflation and growth.
But, Governor, do you worry about the quality of the data because you see this overhang of fragmentation, so that you could see a trend that then gets disrupted by geopolitics?
We have shortage of data in many areas, like services trade, developments in the labor market. We have done a good improvement in terms of analyzing the labor market and wage developments over the past years. But there is still a long way to go and still much to improve. So that's a continuous process. Of course, the geopolitics is currently overshadowing the European economy, and we are analyzing its effects on growth and inflation.
Governor, very quickly, will you serve another term?
That depends on those who will take the decisions. That's basically the Parliamentary Council of the Bank of Finland, and then ultimately the President of the Republic. I'm very motivated to continue as Governor of the Bank of Finland.
Governor, thank you so much for your time today. That was, of course, Olli Rehn, the Central Bank Governor of Finland. And I will send it back to you in the studio in London, and also welcome all of our radio listeners. We'll have plenty more from the UBS conference throughout the day.
Francine, thank you very much. Bloomberg's Francine Lacroix there with the ECB Governing Council member, Olli Rehn. Really interesting guy talking there. I mean, the first time asked about tariffs, saying they need to maintain freedom of action, but then acknowledging that protectionism is inflationary. The tariff impact, though, is medium to long term, and that is really interesting, isn't it? Because not only do we have to be asking questions about the scope of these tariffs, but also the timing.
What does medium term mean? I don't know these days. Is that 6 months? Is that 9 months? Is that 12 months? It's going to be interesting to see how quickly this all happens. The line that really stood out to me was we could be leaving restricted territory in spring 2025.
Yeah.
So you could be down to the level at which we could be hitting neutral by spring. Do they need to get accommodative beyond that is the question I think the market is now trying to figure out. And how much further could they go? Or do they just stop when they get to neutral, given some of the uncertainties, the inflationary uncertainties that exist out there?
I wonder how much of that changes, though. I mean, and I wonder how much of that is dependent on the Trump tariff risk.
Precisely,
or the China tariff risk as well.
Whether we'll know enough by then.
Yeah.
Because if it's not till medium term,
that's
I don't think that's spring, but...
Can I just flag the European tariff response as well? Could be quite significant.
Yes,
Europe is going to be responding.
Will respond, and it won't be caught off guard like last time. And we've already seen Levi's and Harley Davidson mentioned plenty of times.
And I believe isn't spirits and liquor are also the ongoing talk, not to mention other fine goods. We're also going to go from the macro to the micro. We're going to talk about one of the major stock movers, and that, of course, is Bayer. It was halted on volatility. Looks like it's resumed. It's selling down about 12%. More on that and more next. This is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice, saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade. About 30 minutes into today's session. Red on the screen across the European equity indexes. You are seeing the selling continue. A lot of it concentrated in the French and German indexes, now crossing that 1% level. It looks like the FTSE 100 is catching up as well, down about 0.6%, but still the underperformance not as dire as in other parts of Europe. Let's go to one of the major movers this morning, and that, of course, is German chip maker Infineon, forecasting a decline in their 2025 fiscal year revenue this morning. Those shares higher by about 0.6%. Our very own Oliver Crook spoke to the company's CFO earlier about the wider German economy and what U.S. tariffs could mean for the future. Take a listen.
What we would expect is very clearly that, first of all, the government is back in full force so that they can address the geopolitical, the economic challenges which we are all facing. We want to have certainty on the regulatory framework. I would recommend to focus on the energy topics. I would recommend to focus on international trade elements, also with new governments somewhere else in the world. And lastly, but that's more a general comment, also on the defense side, I think here the new government needs to take a very clear position in order to safeguard the situation here for all of us, not only economically.
Yeah, and there's also been a consequential election in the United States with the election of Donald Trump, who has sort of advocated much more protectionist policies, a lot greater trade barriers that will have an impact if he executes on that, more perhaps than anybody else within Europe on Germany. How are you seeing that play out, and how is Infineon preparing for that?
Yeah, so first of all, that would not be very new. We have seen that in the past. Yes, we are a clear advocate for level playing fields, so that is not positive for the industry. On the other hand, we just have to face the realities. It's a geopolitically new situation. It means that we have to increase resilience. We have to provide backups. We have to selectively localize. And with our footprint, where we have huge fabs in Europe, in Asia and in the US, we feel well positioned, and for the rest, we just need to see what the concrete measures will be, and then we will act accordingly.
That was the Infineon CFO, Sven Schneider, there, speaking to our colleague Oliver Crook. For more on the company's earnings and the wider German economy, let's bring Oliver into the conversation. Ollie Crook in Berlin. Ollie, run us through then the Infineon earnings, what they tell us about the German economy, because you don't get very far through the statement before you start joining dots with the auto sector.
Yeah, exactly. And I mean, they're one of the great suppliers to the auto sector and for the chip industry. So I think just overall with the cyclical downturn we're seeing in the auto industry. But what I found interesting is in this conversation, it was not just about the auto industry. There is a bright spot, he said, is that in the kind of actually EVs sold in China, they're still selling a lot of EVs, and they're sort of really very well entrenched in the supply chain there. So that was sort of a bright spot. But overall, the sort of auto industry is down. But what was interesting was it was not just the auto industry. He's saying that across the board, many of their major clients are just basically dialing back not just the volume of their orders, but how long they're sort of fulfilling their inventory for. They're going for much shorter periods of time because of that much more restricted sort of foreseeability sort of on the I should say on the forecast of what's going forward. And so that means for them, they're going to do much lower volumes. Even if net they're bigger in the year, they're going to be doing them much more incrementally because of that, that concern. And of course, that means for them, they're going to have to dial back costs. There's the uncertainty around the trade war. These are all sort of headwinds potentially for Infineon and these German companies. One thing I did find interesting is we saw such a radical move on the euro since the election of Donald Trump. I asked him how much of a sort of protagonist FX is going to be for the earnings going forward. What was interesting is they're forecasting the euro dollar at sort of 110. We're at 106 right now, and actually every cent lower that it is an upward sort of boost to their revenue by about 100 million. So that spread right now is they're going to get a 400 million euro boost to their earnings because the euro is weaker right now.
It's fascinating that so much of that is coming on the back of that U.S. election. When they have an election potentially in their own backyard, Ollie, walk us through the timeline for the German election.
Yeah, so listen, there's still this sort of tug of war between Olaf Scholz and the sort of main opposition candidate, Friedrich Merz from the CDU, trying to get that timeline sort of hammered out. We've got the president, Steinmeier, who sort of plays a ceremonial role, who's just trying to sort of moderate and mediate the next couple of days. One of the key issues, and we talked about it yesterday, is there's concern about basically the country being prepared for this election, having the volume of paper and ballots. So there's going to be a committee meeting today to figure out how prepared Germany is to actually hold this election. That is going to be absolutely key. But really the main event tomorrow, guys, is going to be in German Parliament when Olaf Scholz goes there to really address the government crisis right now in Germany. He's going to speak for 30 minutes, and that is then going to be followed by a 2-hour debate, a very heated debate across the Bundestag tomorrow to sort of see where they can sort of make progress, and that will begin to give us a slightly more shape to what this election will look like. We've also got the latest polling. I'll just leave on a final observation on that. We saw basically everybody sort of really holding on to their position, though we're seeing sort of the moves move away from the smaller parties towards the larger parties. This is the first poll that's been published since we actually got the election called. So there you can see it on the screen. CDU still leading, but the AFD there pushing up to 20%. That is not far from the high watermark of 22% they got earlier this year.
It's interesting in light of what we've seen in other elections recently. Ollie, thank you very much indeed. Bloomberg's Ollie Crook joining us out of Berlin. Let's talk a little bit about what we're seeing in some of the German companies this morning. Let's start with Bayer. Bayer shares down quite hard this morning. The German conglomerate cutting its profit outlook for the year. We've also got news out from AstraZeneca this morning, which is a firm focus of the Bloomberg intelligence team. AstraZeneca's cancer hitch eclipsing a raised view is the line from BI. Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence, joining us around the table. Let's start with Astra. Talk a little bit about what is happening here. So they've raised the outlook. They're investing in the United States, but we've got a little bit of a hitch when it comes to this lung cancer drug.
Yes, Guy. So this is a lung cancer drug that's been, dare I call it, a saga for a while now. It's a complicated drug. It's a very innovative drug. It follows on the footsteps of a very strong product they have called Enhertu, and it tries to, in this particular case, is going after lung cancer. It's just had a bit of a mixed story. The trial didn't work out for the whole group. Then they thought we can file for a smaller group. And in the end, they've now decided not even to file for that. They've pulled their filing. That's a big decision by a pharma company. I don't think this was supremely unexpected, sort of in a right, because it really was quite messy as we went along. And I think quite a few people expected it not to really make it in the end. I mean, even if it did not to have big sales, still, the company did choose to file, and now they've pulled it back, which is not something you see very often with pharma companies.
And now we see that AstraZeneca, so you were right to flag this though, weren't you, as a team, because AstraZeneca, one of the biggest weights to the downside on the FTSE 100, only down by 0.75%, but that's not what you'd expect maybe from a
beta raise. Right. No, so we have a conversation within the team. I did wonder whether, as having started green, it will actually go the red again. The thing is, the underlying business is doing really well. Pharma companies have hiccups along the way all the time. It's part and parcel of developing drugs. It's a risky business. So it's just not nice to see. Otherwise, you look at the numbers, they're looking very, very strong. They have a very strong pipeline. So underlying fundamental story, which of course is also overshadowed by another issue, which I'm sure you'll come to, is solid.
I mean, so many things to talk about when it comes to AstraZeneca. What's more interesting to focus on, do you think, here, Sam? Is it around the competition on obesity and where they're getting into obesity, pills rather than injections, and it's not all about GLP-1s and the like? Is that where we should focus? Or they threw in this big US investment as well today. What caught your eye?
Yeah, what caught my eye was 5 press releases at the same time, which was a little bit of a surprise from a pharma company. Maybe it was just a coincidence that all these things came at the same time. The fact, what caught my eye is that the reminder again that this is a fundamentally strong business. It's been built over the past 10, 12 years. I can't remember how long Pascal Soriot and the team have been together on this to produce a solidly growing, particularly cancer, but also in other areas, business. So along the way, they're having these hiccups. And this particular recent hiccup, which was a China issue, is not a, it's not to be sneezed at. It's a meaningful problem, but it's not an AstraZeneca problem yet. As they've highlighted, it's individuals that have been targeted so far in China, not the company. So again, I want to go back to this. Fundamentally, they've done an amazing job of getting the pipeline and the products moving forward. Along the way, you get hiccups.
Okay, so that was the probe then, Kriti, into certain Chinese employees, current and former, and what they knew about when a certain drug made it into Hong Kong and then across into the rest of mainland China. When I spoke to Pascal Soriot not long ago for the Leader Series, he was talking about how they weren't having their heads turned by all the frenzy around obesity drugs. Yes, they're in that field, but they're not... you didn't get the sense of huge urgency in that space.
I wonder if there's more urgency perhaps around the regulation front as well in terms of pivoting. And Sam, that's where I want to go next, especially not just light of AstraZeneca, but Novo Nordisk as well. Both of them down this morning. Novo has 60% revenue to the United States. How much does regulation matter in the U.S. in this new administration for some of these companies?
Yeah, so there's if I just want to boil it down to two tug of war. There's one tug of war, which is if potentially RFK Jr. does get a meaningful role within the administration, I think he's been vocal about that. He cares about major long-standing diseases such as obesity, etc., but maybe not that much of a fan of obesity drugs. So you got that on one side. On the other hand, you've got the possibility that the regulatory process for getting products approved might become a little easier, a little bit more smooth, because this is a government potentially that's going to be more interested in less regulation.
Even for vaccines?
Vaccines is a different game because they're all approved. So that goes back to that original question of whether Robert Kennedy gets in a position to have influence on that. A vaccine is already under pressure anyway, as you've seen. So, but that's the tug of war that they have. And on obesity for AstraZeneca, remember, this company has been in cardiovascular diseases, is in diabetes, has been in diabetes with GLP-1s before. This is not a new area for them. So, we saw the data, and they're a player potentially.
Let's talk about another major mover this morning. That's Bayer, taking quite the beating, down over 12% the last time I checked. It looks like it's a weak earnings guidance. They're talking about a weak crop unit. What do you make of Bayer?
Yeah, so our team who cover agriculture, we're already flagging that 2024 is a tough year for farmers, basically because revenue is down and crop prices are down. So it's not a massive surprise that they're seeing this kind of pressure. What perhaps is a little bit of a surprise is that they're also guiding to a pretty much flat 2025 versus consensus of a 4% or so growth. This last time I checked. So that is where the issue is, crop science. I'm pretty sure the company wishes it never did that deal.
Yeah, no kidding.
Yeah.
It certainly changed its trajectory. Can I ask you a slightly sort of broader, bigger picture question? Is the pharma sector seen as a winner or a loser? It kind of comes back to your question about kind of regulation versus kind of what happens more broadly in terms of acceptance of certain key drugs. Can I fold in the dollar as well in terms of kind of the dollar earnings story too? Is the pharma sector a place to hide from Trump? Is it a place to take advantage of the Trump trade? Where does it sit in the kind of pantheon of relative trades you can put on with Trump in the White House?
So, Guy, if share price moves since the election don't tell you that story. Share price moves since the election suggest that maybe pharma is not that important in this great scheme of things.
Okay.
Situation. So, what I think might be going on, however, is that people are putting their bets elsewhere. I mean, you've seen the share price of Tesla, right?
Yep.
You've seen the share price of a whole host of other U.S. companies that are more in the feeding potentially into the world of inflation and growth. So pharma is more of a defensive play, and I don't know whether that's necessarily something that's going to benefit under this.
But it's interesting. Over the last few days, defensive stocks have been out. Defensive stocks have done relatively well, but pharma hasn't. So
pharma is a global business, right? So, and if you have situations where there is pressure on perhaps some drug uses, as we talked about, and attitudes to medicine in general, science in general, pharma is a science business, right? And it goes back to the conversation we just had about vaccines, obesity drugs, which are a great help in this fight against the underlying causes of disease, obesity, diabetes, etc. So I think if you view the administration as an anti-science administration, which to a degree you felt it during the previous run, that it's not great for pharma.
Sam, thanks very much indeed. We'll leave it on that note. Sam Fazeli from Bloomberg Intelligence. What have you got coming up for you? Talking of science, climate negotiations are continuing. Are we looking for a breakthrough on day one at COP29? The summit is taking place in Baku. We'll be live there in just a moment with details. This is Bloomberg.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome back to the opening trade, 8:47 here in London, and we have European equity markets very much on the back foot. The Stock 600 down by more than 1% right now. Let's turn our attention to the energy sector. ExxonMobil CEO Darren Woods believes market fundamentals are relatively stable for the oil industry. He met up with Bloomberg's Jemana Besetcha at COP29 and the summit taking place in Baku, where she asked him about the potential impact of a Trump presidency on climate initiatives.
We don't set our business plans based on the political agendas or who's in the White House or what party's in control. We look at the fundamentals and making sure that the investments that we're making are advantaged versus the rest of industry, will be resilient in the bottom of the cycle, and then we make these plans and commit to that. And so I think we don't kind of turn those on and off depending on who's in office.
But your shale production has been growing quite strongly in the last quarter. Can that momentum continue?
Yeah, that's our plans are continue to do that. We expect to, by 2027, be at 2 million barrels per day.
You've invested in some businesses that benefit from the Inflation Reduction Act. Do you have any concerns there that President Trump may look to repeal some of those policies?
So we've been very focused on figuring out how we can bring our capabilities and skills to reduce emissions, recognizing that today there aren't very many market forces in place that will incentivize investments to reduce emissions. And so the IRA was I think a legislation that was focused on carbon intensity, the right way to drive emissions reductions. And so we responded to that to demonstrate there are ways to continue to provide affordable energy and reduce emissions. We have, I think, very competitive projects there, and it's going to be a question of how quickly do we want to advance those. Obviously, we need the regulations to come out of the administration. Even the Biden administration today hasn't fully translated the IRA into effective regulation. So that has to be done even before the Biden administration leaves office. We don't have Class 6 permitting done, which allows us to store the CO2. And so this administration has things to do to advance that. And then we'll worry about the next one when the Trump administration's in.
When they start in January. How do you see the outlook from here? It feels like, barring any of the geopolitical risk, it's been really difficult for us to see a sustained rally in the oil complex here.
Yeah, you know, it's interesting. Demand is at record highs, both for oil and for gasoline and diesel. And so the demand is out there today. The industry's been very effective at supplying that demand. I think that's what you're seeing. And fortunately for us, with some of the turmoil in the Middle East, that available supply has kept the markets fairly stable. And so it's less of a demand issue, and there's just a lot of supply.
And how much of a headwind do you think these China demand signals are posing? Yesterday, one of the catalysts for the market dropping was the fact that fiscal stimulus disappointed what investors wanted to see.
I mean, our industry, we're always stuck between where the supply is at and where the demand is. That tends to vary. We don't get too focused on what's kind of happening outside the window in today's market. We're very focused on the long term and making sure the investments that we make are resilient to that long term and that we're very efficient. We've cut out over $11 billion of cost since 2019 to make sure that we are cost efficient and our projects are advantaged versus the rest of NDC. We feel pretty comfortable, irrespective of the price environment. We've got good investments and we generate good returns.
Darren Woods, the CEO of ExxonMobil, speaking to Jumana Besetcha from Bloomberg, of course, at the COP29 summit. I mean, a couple of really interesting lines here. Speaking quite favorably about the IRA and the way that they've got on board with that carbon intensity is the right way to sort of pivot the industry, and downplaying the role that the White House plays in the energy markets, which I think is really fascinating given where we are right now.
It was really interesting listening to some of the conversations during the show that we've had, talking about the fact that you are going to see some inflationary factors being put in by the Trump administration. Maybe they offset that with disinflationary factors. One of the areas you could do that with would be within energy, and that comes back to the idea that the Trump administration wants to see the US having significant energy strength. Now, does energy strength imply higher prices, or does it actually imply lower prices? Presumably it's the latter. You want lower energy prices. You want to be able to drill, put more products into the market, and keep that as a powering force for the U.S.
That's what Eric Knudsen was sort of suggesting, wasn't he?
It's all a lovely thought, except, and this is something that Alex Steele had educated me on years ago, our energy colleague, who of course specializes in that, and talked about the idea that the U.S. can produce as much oil as they want, but it's still light crude. It's not heavy crude, which is what they still need from the Middle East. So you can have this narrative of kind of being self-sufficient, for example, but you still need to find other sources to kind of create that trade. And right now, the other sources, the only one that really exists in terms of growth market for the United States is right here in Europe.
There's a lot we don't know still about how this Trump administration will perform when it comes to the energy space, I suppose. So we'll have to wait and see. Maybe, Kriti, we go on to the next part of the program, sticking with the energy theme, in fact.
Yeah, absolutely. The climate negotiations are another piece of this. Adair Woods kind of briefly touched on it. And those COP29 underway in Baku for climate financing and security has led discussions thus far. Let's listen in on what the European Investment Bank President Nadia Calvino had to say to our very own Jumana Besetcha on the need to diversify from fossil fuels. Take a listen.
It's not only a matter of climate change, it's also a matter of security. The war in Ukraine has shown that Europe needs to become more independent. We cannot continue to rely on fossil fuel producers. So it's a no-brainer. You know, we have to get on with it.
Our very own Jumana Bersetchi talking to Nadia Calvino about COP29. Get on with it. That seems to be the theme around the world in various sectors. Jumana joins us now. Jumana, walk us through how large the shadow of President-elect Trump looms over some of those conversations.
Well, it's funny you asked that, Kruti, because today is actually the Leaders Summit Day, and many leaders, as we spoke about, have actually chosen not to attend. European leaders obviously dealing with some domestic issues. The Italian Prime Minister, Giorgia Meloni, is here. Sir Keir Starmer is here, but notable absences, and even from U.S. President Biden himself. And of course, we know the U.S. have gained a lot of credibility in the last couple of years on the topic of climate with the passage of the Inflation Reduction Act. But of course, as well, that is all going to change with the return of President Trump to the White House come January. So even though he's not physically here, and I'm talking about President-elect Trump, his shadow looms large. Lots of the discussions that are taking place directly at COP and even on the sidelines of COP are centered around how climate policy could change under President Trump, who has criticized the Biden administration's climate policies. He's talked about repealing some of the subsidies and tax cuts that were put in place by the Inflation Reduction Act. Interesting to hear Darren Woods actually talk about the Inflation Reduction Act and us not placing too much emphasis on one or another administration when it comes to the passage of certain legislation. I thought that was an interesting point. But then also the big question mark here is what could happen should the U.S. decide to withdraw from the Paris Accord framework, and that would be a severe blow to the discussions that are taking place here. And if you think about the deliverables of this specific COP, we spoke about financing, about the need for trillions of dollars of investments channeled from rich countries to developing countries into renewable energy, into energy efficiency. And at the same time, this is an opportunity for countries' delegations to think about their own plans, these national defined contributions, the NDCs, that are due to be presented in Brazil next year, on how they will look to further decarbonize their economies. With the absence of leadership from the United States, does that open up the opportunity for other countries around the world to start slipping on those emissions targets? These are big questions.
They are big questions. We'll look for some answers. Jumana, thank you very much indeed. Jumana Bersetchi joining us from Baku at the COP29 summit. Let's talk about what we're watching in terms of the stock moves we were seeing this morning. Buyers certainly on the move. Pharma stocks generally on the move. We're watching the luxury space as well. LVMH is down pretty hard, but Bayer is the real story this morning.
Yeah, Bayer certainly is. We were hearing from Sam some of his takeaway and maybe some regrets from the business around M&A of the past. But this has been a really long-running saga, hasn't it? The luxury sector was in focus yesterday, I know for you guys, and remains so as well. The Burberry share price, perhaps we'll get that one up on the screen. We can see where that one is. But there've been lots of talk about whether this was going to be bought, and I think latest twist and turn is that maybe not.
Yeah, it feels like a lot is in the red this morning. Risk sentiment down across the board from the micro to the macro. Of course, you're seeing that even in the banking stocks as well. We'll see how much of that is related to rates. We're also speaking of banking stocks as well. Coming up later today, John Messer interview with Citi CEO Jane Fraser. That coming up at 7 p.m. UK time. We'll talk about capital rules. We'll talk about interest rates. All of that on the agenda. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day.
You know, Steve was a teacher. He taught me the value of focus, the importance of simplicity, the fact that making things simple is so much harder than making things complex. For those of us that were fortunate enough to work with him, he was the teacher of a lifetime. My first job was delivering papers. And I was about 12 years old. Everybody was sort of expected to work in my family. And I'd get up at 3 in the morning, pick up the stack of papers and start throwing. And usually come back and take a nap before school. Throwing papers helped start my college education. And I was the first person in my family that went to college. I knew that being able to do that was a privilege that I needed not to waste. Everyone saw college in those days, and hopefully today, as opening many doors and being able to stand on the shoulders of your parents, that education would do that.
Context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at the UBS European Conference in central London. We have a lot of news. These are your top stories. Treasury yields and the dollar strengthen on concern over tariffs from U.S. President-elect Donald Trump. We discuss what it means for the Fed with Kim Crawford from JPMorgan Asset Management. Now, 2 China hawks are expected to join Trump's cabinet. Florida Senator Marco Rubio is understood to be favored for Secretary of State. Florida Congressman Mike Waltz expected to become National Security Advisor. Plus, a breakthrough at the UN Climate Conference in Azerbaijan as negotiators agree on a global carbon market. We're live with the president of the World Bank, Ajay Banga. Now, also on the program, experts from the world of business, finance, politics, and academia are here at the UBS European Conference. We'll be joined shortly by the UBS Investment Bank Chief Strategist, Banu Baweja. But first, let's take a look at the European markets map. Now, there has been a bit of a reversal in terms of what we saw. Stocks actually pausing their advance on Tuesday amid signs that the rally had left valuations now overextended, overstretched, as investors weighing the potential policy impact of Donald Trump's cabinet picks. So we're also hearing from German lawmakers said to be nearing a deal for early elections in February. Let's go cross-asset, because the most important thing is what happens not only to the 10-year, a lot of speculation actually, how Bitcoin can go. I know Bitcoin currently at 89,000. The Hang Seng, one of the indices that has been pulling back the most on the back of concerns about Trump tariffs. You can see the Hang Seng down 2.8% and S&P futures practically flat. Now, U.S. Treasuries continue to face pressure as investors look to rekindle the sell-off spurred by Donald Trump's victory last week. The dollar, however, touched the highest level in more than a year, with traders now positioning for U.S. inflation data this week. Let's bring in Kim Crawford, Global Rates Portfolio Manager at JPMorgan Asset Management. Kim, as always, thanks so much for joining us. I'm sorry, I'm not too far, but I can't be in the studio today. Kim, when you look at
it's really strange
what
having you here.
Traders are now worried about. I know it's strange being so far apart. When you look at inflation, do you worry that this upends everything if we have tariffs across the world?
Well, I think for us, just near term, it doesn't change what the Fed is probably going to do in December. Activity data has been strong in the U.S., but at the same time, the labor markets continue to weaken. Wage growth is still moderating, and the Fed still thinks they're in restrictive territory. And for now, inflation is still near the Fed's target. So for us, the base case is still that the Fed goes in December. But of course, the confidence bands around 2025 outcomes have certainly widened. On the one side, the Fed will still think that they're still in pretty restrictive territory, even after a cut in December. the Fed's rate will still be about 150 basis points above at least what the old neutral was in their dot plot. At the same time, policies from the new Trump administration could take some time to actually hit fundamental data, given the backward nature of a lot of the meaningful stimulus. But on the flip side, it's still a big question mark as well. Can this really lift sentiment more immediately, with the prospect of tax cuts, prospects of more deregulation? So I think the confidence bands have certainly widened for 2025.
So, Kim, how do you play bonds, compared to some of the currency trades? It seems that, asset classes are reacting in quite different ways.
Yeah, I think, even though a Republican seat was going to be probably the most negative scenario for bonds, so higher yields, we saw a small rally after the elections. I think that was due to money being on the sidelines for quite a while ahead of the election uncertainty. We've certainly seen client inflows across our platform post the elections. However, there's still a lot of uncertainty. I think exactly what policies are going to come in will matter, their timing, and also their sequencing. So for us, if I look at my overall opportunity set, which is global government bonds in the developed market space, I think it's clearer that value has probably been created in Europe for now.
So, Kim, where do you see value in Europe? Again, there's a lot of political turmoil, be it Germany, be it probably France. Is it country-specific where you see value, or is it just because of valuations?
Yeah, I think a question we get asked a lot now is all this fiscal noise out of Germany with the elections being brought forward. Does that change your view on whether how Europe is going to perform despite trade uncertainty? So I think even though it's going to take a while to find out exactly what tariffs we get, whether it's across the board or whether it's more targeted tariffs, I think that trade uncertainty is going to weigh on European growth, which already isn't at a strong point right now compared to the US. The early elections in Germany, that brings forward the risk of more expansionary fiscal policy there. But I think that's still going to take time. From what we know about the Conservatives as well, they will probably be more restricted in what additional fiscal easing they want. At the same time, they are going to have to give some concessions to future coalition partners. But overall, I think you get some fiscal offset, but only partial. And I think the timing will matter as well, which is why we think, the ECB is going to have to lean more dovirishly for now. I think the market's also pricing in your trough in the ECB policy rate at about 1.85%. But even the hawks on the committee are talking about that rate probably being at 2%. So I think there is scope for the market to price either the ECB moving faster at some point next year or to eventually a lower rate as well. So value probably in German government bonds or European swaps in general.
Kim, what's your take on, we had a big budget, of course, in the UK. This is all upended because of possible tariffs from the US. But do you worry about, this national insurance contribution from employers and what that means for wage dynamics?
Yeah, I think this is the most important question now that the market has absorbed most of the budget news. The Bank of England told us that their view is that it is going to be inflationary and rates will probably have to stay higher for longer than they had previously expected. But I think now whether the Bank of England is going to be able to speed up any pace of easing is, like you said, going to be very centered around this question. Is this rise in national insurance contributions from employers and the new target bands, is that going to actually influence the labor market? And what we're hearing from businesses so far, at least, is that they are leaning towards cutting employment growth rather than being able to pass those higher costs on to final prices. So we're definitely going to be watching data like vacancies, employment PMIs to see whether you get a more aggressive weakening in the employment market that offsets some of the growth news from the budget.
Kim, thank you so much for joining us. Kim Crawford, their Global Rates Portfolio Manager at JP Morgan Asset Management. Now, coming up, we'll have plenty more from, of course, the UBS European Conference, Treasuries under pressure, as bond investors remain pretty cautious on Donald Trump's plans. We discuss all of that, the U.S. economy, and much more with Banu Baweja of UBS. That's next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Economic fragmentation and higher tariffs, protectionism is by definition inflationary. It would be probably more inflationary in the United States, combined with expansionary fiscal policy supported by tax breaks. But it would have a detrimental effect on the whole world economy, including Europe.
Well, that was the Finnish central bank governor, Olli Rehn, speaking about the effects of tariffs on the global economy. I'm very pleased now to be joined by Banu Baweja, chief strategist at UBS. Banu, I'm so happy to speak to you. There's so much that we don't understand, that we don't know, and that markets are trying to figure out. How do you think, Donald Trump in the White House the second time around will be different from the first time around?
In many ways, Francis, the starting points of the economy are completely different to what they were in 2016, right? In 2016, the U.S. was early cycle. And right now, it's pretty clear that it's late cycle. You look at the unemployment gap, how far unemployment is from Nauru. That's one of the big differences, which means that you give it much more fiscal stimulus, and the risk of inflation is that much higher. The second difference is just the public debt situation in the U.S., right? I mean, your public debt has gone up by about 25 percentage points since 2016, and the willingness and ability of the rest of the world to buy bonds in the U.S. has diminished, right? So term premium in the U.S. economy, term premium in the U.S. curve could be higher, which means that even if the Fed is cutting rates aggressively and the front-end rates come lower, long-end rates may not budge. I mean, this is almost the exact opposite of Greenspan's conundrum of 2005. And he was worried about why long-end rates were not rising when the Fed was rising. Now the long-end rates may not come down as the Fed comes down. So the cost of capital, and I don't think the equity market is paying attention to this, but the cost of capital may not come down as much as the Fed cuts. The third, and perhaps the most important difference, is that risk premia are in a completely different place. I'll just give you one example. High-yield credit spreads on the day Trump was elected in 2016 were roughly 550 basis points. Today, they're 270 basis points, so literally half. And the gains in financial markets, gains in equities are made when risk premia contract, when credit spreads contract, valuations rise. That's already happened, so there's very little room for risk premia to contract. And the Trump that we get could be very different from the Trump. Remember, in 2016, he wasn't expected to win, so taxes being cut lower was a very big surprise. At this minute, the market's already pricing in lower taxes, at least 19%, so 21% in the markets. But tariffs, I'm not sure that's being priced.
So, but are you expecting it to be almost range-bound? Or actually, do equities go down when they realize some of the damage that could happen from inflation or even lower growth?
I think growth-inflation mix could be a big challenge under this administration. So after this initial bout of euphoria, which I don't think is over as yet, by the way, I mean, you will see the NFIB survey, the small business owner survey rise aggressively, and that should mean small caps do well. That should mean that the breadth of the market could increase. But I have no doubt that I think we will go through an air pocket in the market through the first half of next year, both because the policies, the tariff policies will become obvious, the immigration policies, and that's something that I don't think we're speaking enough about. I mean, how lack of immigration, let alone deporting, lack of immigration how that impacts the growth inflation mix. So I think there will be an air pocket in the first half, and the market really has to reconcile not just with the good Trump policies, deregulation, lower taxes, but also what lower immigration means, what higher tariffs mean. That, plus the fact that organically, even if we sort of don't look at the world from a political lens, not from a Trump or Harris lens, but just from an organic, where are we in the cycle, the U.S. consumer has been super normal for 6 quarters and should slow down.
But you were one of the first ones, actually one of the only ones that's always looked at immigration as, you know, one of the strengths of the economy, and there was a direct correlation. Now, you sent me papers on this. Do you worry that, are you more worried about, you know, Donald Trump in the White House cutting down immigration and therefore putting the recovery or the strength of the U.S. economy at risk than you are tariffs impacting the rest of the world?
Very much so, very much so. So I think, tariffs will impact the rest of the world. I'm not saying tariffs are irrelevant. They are very consequential. At a time when global trade is very weak, it really does matter. But again, if you look at what has helped the U.S. economy do as well as it has done over the last 6 to 8 quarters, I don't believe it is a surge of productivity. I mean, this is a debate you and I have had for some time. I don't believe it is a surge of productivity. That can happen in the future. I'm open-minded to that. But really what's happened is more old-school factors like fiscal help and immigration. And both of these, it's not clear that both of these will continue. I mean, even with Trump's fiscal, where the marginal propensity to spend for some of the places where he's cutting taxes is actually very low. So the growth impact of that is actually going to be de minimis. So the actual fiscal impulse is not going to be that strong. Plus, if you get much lower immigration, that's growth negative and inflation positive.
But what do you expect the dollar to do in all of this? And actually, has there been, you know, Donald Trump has said he wants a weaker dollar.
Yes, but ironically, most of his policies point in the opposite direction, as you know. So in my mind, one variable that drives the dollar more than anything, and of course there's a gazillion variables, but the variable that really drives the dollar more than anything else is how the rest of the world does relative to the U.S. And if at a time when global trade is already very weak, you're imposing more protectionism, it's really hard to see how you get a major renaissance in growth in the rest of the world. Yes, you could see the European consumer rebounding from a bad level. Yes, you could see the Chinese consumer rebounding from a very, very poor level. But you're really not going to see a very big growth pickup. And in that world, the dollar remains quite likely strong, especially against emerging market currencies. Now, I don't believe that the Fed is going to be hiking aggressively because of tariff inflation. And I think the Fed will probably look through that. And as a result of that, front-end rates will probably come lower. That will matter for things like gold, which we are positive on. That will matter in the longer term for things like the yen, which if we get to 160, I think we should be positive on, but not EM currencies.
I mean, gold is also a funny one because it almost seems like almost taking over some of the reserves. So I don't know whether there's going to be less dependence on U.S. dollar because, you know, certain central banks will say, actually, I'd rather hold gold.
So that is actually already happening, Francine. I think life for gold changed the day the Central Bank of Russia was sanctioned. Right, at that point, most central bankers and asset managers sat around the table and asked themselves, what is money, right? What is money? If treasuries are not, if gilts are not, if bonds are not, then what is money? Of course, you can't allocate your entire portfolio to gold, but most of these are allocating more. But it's not just central banks buying. It's not just asset managers buying. It's also retail. China has about $42 trillion in M2, and all of that is within that system, of course, because it's a closed capital account. Now you're not going from your 4th house to your 5th house to your 6th house because, of course, houses are for living. And so you are allocating, Chinese retailers are also allocating more to gold. So gold's relationship with real interest rates has become completely and utterly asymmetric. Gold does react when real interest rates come down, but has not been reacting when real interest rates go up.
But are you expecting Donald Trump to go after the Fed, the independence of the Fed, if dollar doesn't move the way he wants it to, or even if the economy doesn't behave how he's expecting it to?
I think, so in the near term, which is, let's call it the next 12 months, I think the Fed and Donald Trump will want the same thing, which is lower rates. Right? I mean, the Fed has signaled, why did it start with 50 basis points? It has signaled that it really has broken the back of inflation, and now it'll once again start looking at monetary policy rules like Taylor rules and take interest rates just based on where inflation is, take them back to neutral. The Fed is not going to preempt the impact of tariffs, remember that. So I think the Fed and Donald Trump will want the same thing. I think the debate is going to heat up when we sort of see the bottom of the cycle, which could be 12 months away, and then the Fed needs to start hiking rates once again. That's when I think the pressure. So can Will he want to interfere with the Fed? Absolutely. There's no doubt about that, right? I mean, his entire business model is, he said it quite explicitly, his entire business model is cheap money. I mean, that's one of the ways he wants the world to be able to do business with, low cost of capital. Will he be able to intervene with the Fed? I think that's unlikely, right? Because there are very few governors whose terms are coming over. I think 2 governors till 2028, Powell in 2026. So it's not clear that he will be able to compromise the independence of the Fed. If I'm wrong on that, and he does compromise the independence of the Fed, that changes everything. That changes the call on the U.S. economy, that changes the call on the U.S. curve, that changes the call on the dollar. I think the probability of that event, thankfully, is very, very de minimis. It's very low. But the negative payoff from that is so high, I don't think any financial market asset is anywhere close to pricing it.
Banu, thank you so much, as always, for joining us. That was Banu Baweja, Chief Strategist at UBS. Coming up, the U.S. President-elect Donald Trump's cabinet takes shape. We tell you who's in and what it signals about his administration's policies next. This is Bloomberg.
Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is The Asia Trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg.
I think we in Europe and the rest of the world needs to understand that Donald Trump is very serious about getting a peace deal sooner rather than later. I have myself said that there's a window of opportunity for these negotiations between the election and the inauguration day. Let's see what happens.
Well, that was Finland's President Alexander Stubb. Now, Donald Trump's new cabinet is also beginning to take shape with more high-profile appointments. Let's get more from Bloomberg's EMEA News Director, Ross Matheson. Ross, thank you for joining us, as always. So what do the new appointments, loyalists, what do they mean for China-U.S. relations?
Well, it's interesting to see the combination of Mark Rubio and Mike Waltz. You've got two US officials coming in to the new administration, most likely with senior roles advising on foreign policy, and they're both very much China hawks. In fact, Mike Waltz, who's currently a congressman, has described China as the biggest threat of all for the US, the singular most important foreign policy focus for the US. So if we need any reminder that we're going to see potentially higher tariffs on China, an even more tense economic and trade relationship, but also from Mark Rubio, perhaps pushing hard on the human rights issues with China. And that's something that China is going to focus on very, very closely. They prefer to separate those things out. They don't want trade and human rights to bleed in together. So are we going to see the US pushing not just on the economic and trade front, but twinning that again further when it comes to human rights? And of course, the slight wrinkle in all of this is that Mark Rubio has been sanctioned by China. So how do they circumvent that in terms of potential visits to China and communications between senior officials?
So, Roz, what kind of impact does it have on the Middle East?
Well, obviously, also there, you've also got Mark Rubio again, but you've got others coming into the administration. Elise Stefanik, obviously, as the US ambassador to the UN, and others who've been, very, very strong in their support for Israel when it comes to the conflict in the Middle East, and in fact, criticizing the current administration, saying they're not being overt enough in their support for Israel. In fact, Mark Rubio has also said previously that Israel should be able to respond disproportionately against Iran for some of the tit-for-tat that we've seen go on between Iran and Israel. So obviously they're opening the door perhaps for Israel to more directly engage against Iran. And that's something that obviously Benjamin Netanyahu has indicated he's willing to do. So you could see more direct tensions between Israel and Iran under the US umbrella.
Roz, as always, thanks so much. Bloomberg's EMEA News Director, Roz Matheson. Coming up, we go to Baku, Azerbaijan. Climate negotiations underway as world leaders convene for day 2. We speak to Ajay Banga, president of the World Bank. That's next. This is Bloomberg.
Missed it on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, the fact that if you can do it, you're one of the few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position because, again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua at the UBS European Conference, and these are your top stories. Treasury yields and the dollar strengthen on concerns over tariffs from U.S. President-elect Donald Trump. Two China hawks are expected to join Trump's cabinet. Florida Senator Marco Rubio is understood to be favorite for Secretary of State. Florida Congressman Mike Waltz expected to become National Security Advisor. Plus a breakthrough at the UN Climate Conference in Azerbaijan as negotiators agree on a global carbon market. We're live shortly with the president of the World Bank, Ajay Banga. Now, oil gaining this morning, recovering from concerns over a soft demand outlook from China, a stronger U.S. dollar, and concerns that the market may flip to oversupply. The ExxonMobil Chief Executive Officer, Darren Woods, told Jumana that oil prices are being affected by strong supply rather than demand.
Demand is at record highs, both for oil and for gasoline and diesel. And so the demand is out there today. The industry's been very effective at supplying that demand. I think that's what you're seeing. And fortunately for us, with some of the turmoil in the Middle East, that available supply has kept the markets fairly stable. And so it's less of a demand issue, and there's just a lot of supply.
Well, that's Darren Woods, Chief Executive of ExxonMobil. Now, day one of COP29 saw a breakthrough on climate negotiations, with world leaders agreeing on rules for a United Nations-administered global carbon market. Well, joining us now from the summit in Baku is Jumana Bersace with a very important guest. Jumana, over to you.
Fran, good to see you. Thank you so much. Yeah, joining me right now is the World Bank President, Ajay Banga, on the sidelines of COP29. So good to be speaking with you.
Thank you.
You know, this COP has been called the finance COP, and there's been a lot of conversations about financing and where the financing is going to come from. But I actually want to rewind back to COP28. Because you yourself set out some targets for the World Bank to achieve on different parts of the climate discussion, be it methane, be it carbon markets, be it financing. Just give us an update on the progress.
Sure. So we talked at COP28 about setting aside 45% of our financing would go to climate, half to adaptation, half to mitigation. Really, adaptation is schools and roads and heat-resistant varieties of seeds, basically development done right. And where we are now, fast forward a year, we're at 44%. So we plan to get to 45 by next year. So we're doing fine there. The second part we talked about was to do a great deal of work on methane. Methane is, much more dangerous than carbon dioxide. We've actually signed up a number of countries for rice, 6 countries for rice farming. I had talked about that. About 10 to 12 countries for dairy and livestock and how to manage that. Another 5 or 6 countries for waste management. If we do what we're talking about with all of these, we could reduce 10 million tons of methane from the atmosphere over these projects. Third big one is climate resilient debt clauses. We'd already announced them when we were there. We've now just today announcing that not only will we cover hurricanes and earthquakes, but we'll also cover all other kinds of catastrophes, floods, droughts, and pandemics. And the last one, which we had announced, was forestry credits. And the good news there is we've got about 5 million we've already generated, and we're trying to get to more in the coming years. So work is progressing.
So work with World Bank is progressing, but if you look at it as an aggregate level, there's a lot of dispiriting evidence coming through showing that we're nowhere near where we need to be. Can I just ask you whether you think the targets set back in 2015, the Paris Accord framework, are those targets still achievable to your mind?
I said this in a panel today, I don't look at it that way. The moment you start saying you need X trillion dollars, you said getting people their eyes glaze over. Much more important is to do what we are doing and push as hard as we can on the right things to do. It's not just about climate, it's about development. And even more importantly and more urgently, at the end of the day, is the issue of jobs for young people. There's, roughly 1.2 billion young people who are going to come through the pipe in the global south in the coming few years, 10 to 15, those same countries are currently on a pathway to generate 420 million jobs.
Yeah.
I think we really need to start focusing on how to do that. And so you'll see, I'm trying to move the World Bank to say, of course we do the pillars of development, education, skilling, and healthcare and climate. But actually what we're trying to do is to make sure we work with governments to enable the private sector to generate jobs. That's what I'm still focused on.
So you said about 40% of your financing is going towards climate. Is that number likely to change? Could it change with the return of President Trump, the U.S. being the largest stakeholder in the World Bank? Could it throw that target into question?
Just remember that what I'm doing with that money is actually doing the things that everybody wants to do, including him. At the end of the day, I'm trying to make sure you build schools that can resist a hurricane, roads that can survive a flood, heat-resistant varieties of seeds. Where do those seeds get developed and where does the IP come from? So the moment you start making this something more than it is, yes. But I'm not in the business of talking about whether we are doing only mitigation. Of course we do mitigation. For example, at COP28, I talked about 100 million people in Africa we would reach with power by 2030. I've upped that to 300 million with the African Development Bank. Some of that will be renewable energy and solar. Some will be fixing current transmission grids. What's wrong with that?
Well, I think there is a lot of concern here, even though President-elect Donald Trump is not actually physically present. There's concerns that the U.S. may cease to lead the way on some of these climate discussions.
I think the way to think about this is he won an election, respect that vote, and let's start thinking about what he does as compared to what we all think he will do. That speculation isn't going to get us anywhere. Yeah. Let's watch his actions, watch his deeds, and work with him on explaining why these things are good for American business, for European businesses, and for everybody else. I think that's a far more constructive way of engaging with this administration.
Yeah, fair. Let's talk about financing. Trillions of dollars of needs are the numbers that are being put out. And again, one of the focuses of COP29 is to come to that new agreement on the money that flows from rich countries to developing countries. Right now, the annual target is 100 billion. Obviously, it has to be revised higher. How big of a role do you think multinational development banks are going to be playing in getting this financing?
I mean, we can't be the ones who source the trillions. We don't have it in our balance sheet. Yeah. Just to be clear, neither do governments. It has to be the private sector. I think our biggest role is in facilitating, aside from our own balance sheet, is in facilitating private sector investment. So I've talked about this private sector lab we set up, right, with Mark Carney and Shriti and a bunch of CEOs. We've got 5 things we're working on. That work has already begun. The first one is regulatory policy clarity. So with this 300 million people in Africa, in January, at the end of January in Tanzania, we're doing a summit with 15 heads of state. They're going to lay out what are they going to change for the private sector to feel better to put my money in this country than that country. First step. Second, they wanted clarity on, sort of political risk guarantees. We've merged all our guarantees across the World Bank together. We've already doubled how much we're doing, and I've only been here 17 months. In the first quarter, we trebled. So we're headed in the right direction. The third one is, can the World Bank take the first loss in certain projects, junior equity? So we kind of get people over the edge on investing. We're creating the Frontier Opportunities Fund to help finance that. That should get launched somewhere over the next couple of months, funded by our own earnings as well as philanthropy. And then the fourth item is foreign exchange. And there, IFC has already reached now between 30 to 35% of its financing is local currency. So I'm trying to work local currency swaps with commercial banks. And then the last one, which is the most exciting, is to make an asset class out of these loans. That's going to require standardization of loans, creating a rating agency wrapper, and the like. What I've just done is signed up Doug Peterson, who's just retiring from Standard & Poor's. He's going to lead that for us. So I think we're making progress on all fronts.
Yeah. How successful do you think you will be at de-risking some of those public risks or risks that the public have around investing in these developing
Like I said, the
projects?
guarantee platform is very helpful. We're already doing that. There are absolute numbers there. The foreign exchange risk is another an absolute one. IFC is now at 30-35% of its financing being local currency. And then the big piece is the regulatory policy. And that one we'll see now at the end of Jan when we do this in Tanzania. You'll be able to see what we're doing there. And then the last one is that big asset class idea.
Yeah.
So one step at a time.
Yeah.
People think that there's a silver bullet to be fired in all this. Don't think like that. Think about it as a series of things to be done with the private sector, which over time changes their thinking about this area it's not that they don't want to invest. If there is a business reason to take their money to a country, they will. But they're not going to take it there just because somehow we think it's the right thing for them to do it. We've got to allow them to see the opportunity.
And create the right space for it. Ajay Banga, thank you so much. Always so good to talk to you. Ajay Banga, World Bank President. Francine, I will toss it back to you.
Jumana, thank you. Jumana Barsecha there with the World Bank President. Now, we have some breaking news. It came in the last couple of minutes. German lawmakers finally agreeing on a date. That federal election will be held on February 23. Now, for more, let's bring in Bloomberg's Oliver Crook in Berlin. So I guess, Ollie, what happens now until the 23rd of February when we have a federal election in Germany?
Yeah, that's right. So there's a tug of war that was going on between Olaf Scholz, the chancellor, and Friedrich Merz, the head of the opposition party of the CDU, really trying to figure out on what date they would get this election. Scholz was pushing for March. We now have had an agreement between the two leaders and the stakeholders. We will have a federal election here in Germany on February the 23rd. That is more than 7 months ahead of time of what we were anticipating. If there was a regularly scheduled election at the end of next year, that all came early when Scholz pulled the plug on the government. What we get now is we have to have Olaf Scholz, the chancellor, come to the parliament, to the Bundestag. He needs to call a no-confidence vote in himself, which is really just procedural at this point because he's expected to lose that. Then within 60 days, the election will be held, and that is exactly the process. So we finally now have transparency that the Germans will be going to the poll on February 23rd of next year to elect a new government.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, also on what's at stake in Germany. Coming up, traders bet big on Bitcoin. Can crypto's rally actually last? We'll discuss that next. And this is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Earnings season is here.
This earnings season tells us there is more to life than mega caps.
Bloomberg is first to break the numbers.
Let's talk about Deutsche Bank here.
BASF with that big exposure.
We have numbers from Barclays, from Hermes, Anglo-American.
We've got a lot of earnings to work our way through.
With the smartest insights.
I think the BBVA has posted really a very strong set of results today with that bottom line.
Some more cautious on Q3, but I think it's in a better place than it was.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. We're here at the UBS conference in central London. Now, Bitcoin surging past $89,000, lifting the total value of the crypto market above its pandemic-era peak. Now, this comes, of course, as buyers continue to bet on a boom under President-elect Donald Trump. So let's get more on all of this from Bloomberg's Valerie Teitel. Valerie, what's the limit here?
Look, there is a powerful force behind this rise in Bitcoin, Francine. Overnight, Bitcoin became the 8th most valuable asset in the world, overtaking the market cap of the world's total value of silver, and just behind Saudi Arabia's market cap. Saudi Aramco's market cap. Bitcoin has now risen nearly 30% since it became clear that Trump was due to win the election, and we have seen very strong inflows into those newly created Bitcoin ETFs. There have been other Trump trades which have taken up steam, notably S&P futures and small caps in the U.S. This is on a weekly basis, have now risen over 7%. Those small caps hit a new high yesterday since 2021. All of this because we want to be exposed to this domestically driven growth that we can see coming out of the U.S. Kathy Woods commenting yesterday that the deregulation under this new Trump administration could unleash a powerful tailwind into the U.S. economy akin to the Reagan revolution. And we've seen a big inflow of ETFs, of U.S. exposed ETFs. Those investors want to be exposed to this U.S. growth story. A possible headwind for the equity market, Francine, could be a sustained rise in Treasury yields. Treasuries were on a holiday yesterday. They're back to trading today. We are seeing a big move when it comes to the front end, but it's not yet denting this risk appetite. We have heard, though, warnings from Rubini on the impact of bond vigilantes. They could come back. Take a listen.
He cares about market discipline, and if bond yields go higher and the stock market correct, that's a bond vigilante in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate.
Rubini there talking about the bond vigilantes still out there watching these stimulus plans, this fiscal spending promise under the new Trump administration. We've seen 10-year yields rise post-election, but they've not risen that much. We're now 9 basis points higher since Election Day.
Valerie, thanks so much. Valerie Teitel there on the very latest with Bitcoin. Now, Bloomberg has learned that Olaf Scholz's Social Democrats and opposition lawmakers reached an agreement, finally, to hold a federal election on February 23rd. Now, for more, let's bring in Bloomberg's Oliver Crick in Berlin. So, Oliver, tell us a little bit more about the timing. I know Olaf Scholz wanted to delay it, but actually the opposition has been trying to get it as soon as possible.
Yeah, Francine, it's been a huge debate. It's been the big back and forth for the last week, basically, between Friedrich Merz, the head of the CDU, and Olaf Scholz, the chancellor and head of the SPD, about when they should hold the election. They finally have struck an agreement. We have the federal election on February the 23rd. There were a lot of concerns. Merz was saying that basically Scholz was just trying to hang on to power for longer, trying to sort of gain political points going into the election. Olaf Scholz, for his part, was saying that basically, no, we need to be prepared to have this election. Francine, there was concerns there wouldn't be enough paper for the ballots to actually hold the voting. So this was going to be all the sort of things that were going to be discussed, but now it seems that they have been satisfied with the fact that Germany will in fact be prepared to hold this election and will head to the polls on February the 23rd.
So what are the polls actually saying?
Yeah, so you can just see them on the screen there. What we've seen, that was the first poll that we've actually seen since the vote was called. So this is sort of a meaningful change in some of the sort of allegiances that we saw. We basically saw all of the mainstream parties, as you can probably see there on the board, going up and gaining a little bit of points ever since the government collapsed. This means that basically a lot of German voters have moved away from some of the smaller parties in favor of some of the larger parties to potentially be able to gain some power in this next government. I will sort of say what is interesting is what we've seen here is obviously the CDU has been leading for a long time in the polls, Merkel's traditional party. What is interesting is you see there the AfD, the Alternative for Deutschland, the far-right group, which is basically heading into this federal election with the strongest support it has ever had in going into any election ever. It is at about 20%. That is just shy of the 22% high watermark that they have that they've enjoyed in the past. And really, if you look at the current coalition, SPD, the Greens, the FDP, they're all doing a lot poorly, much worse than they did did going into 2021. So we're going to sort of look at some interesting calculus of who's going to be able to work together. The baseline sort of assumption right now, and again, this is still very early in this cycle, is you could potentially form a government between the CDU and the SPD Grand Coalition, which is what you had in the last term of Merkel when she was chancellor and Olaf Scholz back then was finance minister.
Ollie, what are the key issues that people will actually vote on?
Yeah, I mean, the reason that this government collapsed was because of the disagreement of basically how to fix Germany's economic problems. And those economic problems we've been talking about for many, many months, if not for many, many years. There's questions around the sort of the future of industry, energy prices, and really the CDU is going to go with their sort of classical solution to problems, which is to cut taxes, to cut back the welfare state. Olaf Scholz is, again, very sort of opposed to that. Where I think, Francine, the debate will get interesting is around the debt brake. And the debt brake is the reason that basically the German government collapsed, because the Greens and Olaf Scholz said, unless we sort of start being more flexible about the amount of money that Germany can borrow in order to fix its considerable economic problems, there will be no progress and this economy is in big trouble. The question will be now, the CDU, which has a self-proclaimed fetish for the debt brake and for zero debt, will they be able to, because of the urgency of the problems facing Germany, will they be able to get into a position where they are beginning to think about reforming the debt brake? That is going to be the key issue going into this election.
Ollie, thanks so much. Oliver Crook there with the very latest on the German elections. Coming up, AstraZeneca rises its annual forecast, announces a plan to invest some $3.5 billion in the U.S. We'll have plenty more on that next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Well, AstraZeneca has raised its annual forecast and announced a plan to invest $3.5 billion in its U.S. business by 2026. Now, Bayer shares, meanwhile, plunging this morning after the German conglomerate cut its profit outlook for the year. We're joined by Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence, with the very latest. Sam, always good to speak to you. So could you tell us a little bit more about AstraZeneca's third quarter beat?
Sure, good to see you too, Francine. Third quarter beat was a nice beat, solid beat. But what's more important is that they raised the full year guidance too. And pretty much the company is firing on all cylinders when it comes to the product performance and earnings and margins. So, you know, fundamental story remains solid and intact. But of course, that's dragged down a little bit by some other issues. A tiny issue today that we referred to, which is a pipeline, I would say, setback. But also this China question that's been hanging around for now pretty much close to over 2 years.
So Sam, on the China question, could China's investigation into AstraZeneca actually weigh on its share price?
Yeah, so it has weighed on the share price, but I want to do a tiny little correction there, Francine. They're not investigating AstraZeneca. They're investigating, and the company went to some meaningful lengths to try and say that in its press release right up front and also in the details. It's individuals who work for AstraZeneca who are under investigation for practices. The company has not been notified of an investigation, and of course they've said in the press release that they will cooperate, which of course is the only thing they can do. So that's been going on, but a similar situation arose about 2 years ago when the company then, as a result, fired something around 100 individuals within the company in China to deal with it. But so this is not exactly new. It feels like a continuation of the same issue.
All right, Sam, thanks so much. Sam Fazeli there with the very latest, of course, on AstraZeneca, and we'll get to Bayer as well. Now, a reminder, Bloomberg has learned that Olaf Scholz's Social Democrats and opposition lawmakers have reached an agreement to hold an early federal election on February 23rd. So we'll have plenty more, of course, on that throughout the day to try and figure out what the polls say, what the big election campaign is and will be. Some saying that actually, if Friedrich Merz were to be the Chancellor of Germany, he has a more abrasive personality than Olaf Scholz, and some, of course, would say that could work quite a lot better with Donald Trump. I don't know whether that's true, but that's one of the line of questions that we'll try and get to the bottom of. Up next, Bloomberg Brief, plenty more to come, and this is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Good morning from our global headquarters here in New York. I'm Menace Crenny. Welcome to Bloomberg Brief. Let's set that agenda. The bond bears are reawakened as the cash reopens. Stocks pause their gains while Bitcoin barrels towards $90,000. A Fed's big marathon Governor Waller set to kick off a host of remarks from Fed officials this week. And look out for the China hawks. President-elect Trump appoints Senator Marco Rubio and Representative Mike Waltz to his cabinet. Good morning. So there's a little bit of a shuffle higher in the bond yields. It's just causing a little bit of a pause for breath in equities. Mag 7 dipped a little bit yesterday. We're hearing more about the appointments to the cabinet, to the court of Trump. JP Morgan still say it's going to be a home run. You did 50 record highs. You didn't manage to put in the 51 yesterday. But JP Morgan said it's going to be a home run. Team USA, it's just going to be like the end of 2016. And just to give you some calibration for the end of 2016, the Russell went on to add 14% between Election Day and the end of the year. Roll it over and you'll see what I mean about the bonds. We're waiting for Waller, Barkin, Kashkari, and Harker. We're also going to get the SLUs, the senior lending officers narrative. Now, yields are just popping more so at the short end relative to the long end. So again, this is just very much a recalibration in the bond market. It just sort of hasn't reached a level to unseat the equity market rally, not by a long chalk. I want to show you Bitcoin because it's pretty magnificent. Up for the 6th day in a row. You're looking at this now, up 32% since the election day. We've come off our highs of the morning, and I'll talk to you more about what Cameron Winklevoss, the co-founder of Gemini, had to say a little bit later on. But right now, we're just coming off the highs, but it is a pretty exhausting run. So from Bitcoin, which is ground zero, let's say, for the Trump trade. Also, it is the dollar. Just look at the 5 days on G10 currencies, and you will see the pain that was felt in the euro and some of the other Nordic currencies. This is WCRS. You can see that ground zero for the pain was the krona and the euro, down 2.76% over the past 5 days. So the dollar is in its ascendance. And with that in mind, SocGen's Kit Duke, our next guest, says this: as long as a stronger U.S. growth and higher U.S. rates and the world's confidence in the dollar's status are intact, the dollar will remain very highly valued. But we doubt it can get much more highly valued than it is already. I'm pleased to say Kit Dukes joins us now, Chief FX Strategist over at SocGen. Kit, which brings me to the point, which is this already at peak dollar? Or are we nearing that without knowing the details of what Trump Mark II will be?
I think I'll side with JP Morgan and say peak dollar is probably at Christmas, for want of a better day. In other words, we're going there fast now. If the bond market goes into a fourth quarter rise in yields, if the whole debate about tariffs continues, then we're going to push this pretty hard between now and Christmas, but I think we're more or less done then. The starting point, remember, is that the dollar in real terms is higher than it's been at any point since the 1980s. So it's a very big dollar. But the other side of that is in 1985, it went miles higher than this, sort of 84, 85, until President Reagan sent his Treasury Secretary, Jim Baker, off to Paris to say, well, we'd like to get everybody behind us to intervene. We'd like to have a meeting sometime, which turned into the Plaza Accord, and we're going to change our stance on fiscal policy. Donald Trump's not going to do that anytime soon. So we've got more to go. These things can overshoot. I don't think we'll beat the highs that we saw in 2022 in euro-dollar. I doubt we'll make a new high in dollar-yen. But right now, we are definitely going to go up a little bit further.
So if he's not going to go for a recalibration as in the Paris Accord, as in sending Baker to Paris, but he is potentially going to send Marco Rubio and Mike Waltz out on the road. Your first take on those appointments?
Well, we'll see. I mean, they look like Team Trump people, so that they're going to be in line with the message that he wants. So we're going to have a conversation about trade, certainly, and a conversation about what the U.S. wants from its partners around the world, and it's likely to be, quite difficult conversation for other people, and I think everyone's recognizing that. So the big conversation is the one they're going to have with China, obviously.
Obviously. Can I just test why you think we're going to hit this peak dollar narrative around Christmas time? What is it? Is it that we travel and arrive? Once we see the potential for tariffs, we begin to breathe a sigh of relief. We know the knowns.
Yeah, there's a lot of already in the price from where we are now. Remember, the dollar's been going up for a bit. It's been very strong for a very long time. We understand U.S. economic exceptionalism. We understand that U.S. interest rates are higher than elsewhere. The carry trade is back on in earnest in Japan. But the foreign exchange market isn't the equity market. It's not the Bitcoin market. It's founded at some point in a sense of where your long-term value is. So you know that in the longer run, real exchange rates do mean revert to a significant degree. The dollar is at very high levels, accelerating higher, and the big acceleration brings the peak closer.
Okay, closer and faster. Therefore, is the demise of the euro closer and faster perhaps than we think? Political chaos, a cutting cycle, tariffs. And as you say in your words, Europe has a problem. It's called Germany.
Yeah, I mean, the European economy is not functioning. But what Germany is two things at the same time. One, it's an economy trying to find its way now that it can no longer rely on very cheap energy supplies. And secondly, trying to work out what to do with its money. Germany has replaced Japan as the world's biggest exporter of capital, of savings. So they have the biggest net investment surplus in the world now. That sort of... It means they've got an enormous amount of money that's flowed out, but we've seen what happened to Japan. The yen weakened a long way after that. What they need is to get some of their savings invested at home, making things, doing things, green or otherwise, that get the economy moving. And the sooner they just grasp that nettle, the sooner the euro will stop being under pressure.
And that's a political nettle, isn't it, for 2025 in terms of going to the polls?
Exactly. We need Europe to recognize its growth deficit, to recognize the things it needs to do, and possibly to recognize that it needs to, create conditions for more investment to happen at home, rather than just wash around looking for higher yields on the other side of the Atlantic.
We mentioned China. I'm going to spend a bit of time in the next section talking to one of our colleagues in China in terms of the response, the fiscal response that we are seeing. But Kit, to what extent, given that you've seen these cycles before, do the Chinese front-run the most extreme policy response from the United States of America? And what tolerance do they have for a weaker yen? What's an acceptable weaker yuan, excuse me? What is an acceptable weaker yuan that is not attacked aggressively by the international FX markets? What's a controlled depreciation for yuan?
Well, I think a quick depreciation is almost better than attempting at controlling slow slippage. I mean, the problem that they have is that once it seems to the rest of the world, that if you have a big increase in tariffs, that the response last time was to just let the currency weaken to offset that. If people think that's going to happen, you have to have watertight capital controls to stop yuan leaving the country and the currency weakening slowly, steadily on the back of capital flight. So there is an argument for saying that you should go now and make a big step where, then say we're not letting any more happen. The other side of that is that the Chinese administration has never shown any inclination to use the currency as a policy tool in any make, shape, or form. So they would rather the problem just went away. So we'll have to see how Beijing feels about this. But the danger is that the Chinese people get ahead of this and start getting out of yuan before the inevitable devaluation happens, if that's what the policymakers feel pushed to.
Listen, let's just close off with here in the United States of America. We spend a lot of time pre-election and post-election talking about tariffs, 20%, 30%, 60%. However, perhaps less aggressively spoken about is the deportation. We're beginning to see who's going to be in charge of that regime. That is a structural supply-side risk in the United States of America.
Yeah, I mean, the problem that the U.S. is going to face, others do at the same time, is that if you're running your economy very strongly, if you're creating strong employment growth, and if you're then saying, I want to bring manufacturing jobs home, but your unemployment's 4.1% today, 4.1% is very low by historical standards. It can get lower than this. But if you don't get the kind of labor force growth that the States has had in the last year or two, it gets really difficult. You'll get more upward pressure on wages. And then President Trump will have to be careful because it would seem that, to a significant degree, that the last two elections I've watched, inflation cost the Prime Minister and President his job.
It did indeed. Kit Jukes, thank you very much. Laying the table this morning on the FX plane. That is Kit Jukes of SocGen. Other stories trending on your Bloomberg terminal. This is what we got for you. Nissan shares jumping the most in 15 years after an activist investor took a 2.5% stake in the automaker. The investor is believed to be managed by Effissimo Capital Management and is fueling speculation that the company may undergo structural reforms. SoftBank swung to the biggest quarterly profit in 2 years on a series of successful Indian listings. Its plans to shift its focus towards generative AI with the recent bets including OpenAI and Perplexity AI. German Chancellor Olaf Scholz, Social Democrats and the opposition lawmakers have reached an agreement to hold an early federal election on February 23rd. That's according to government officials familiar with the talks. Scholz will need to trigger the national ballot by first submitting a confidence vote that will likely come in December. Coming up, China hawks and Israel allies. President-elect Donald Trump continues to fill the cabinet. More on the story. And we'll unpack the moves and how they're reacting in the bond market with Kathy Jones from Charles Schwab later this hour. Context matters on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. U.S. U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Manus Cranny here in New York. More appointments coming in hard and fast from President-elect Donald Trump. He's expected to tap Senator Marco Rubio as Secretary of State and Congressman Mike Waltz as National Security Advisor. CNN also reporting that Kristi Noem has been picked for Homeland Security. Let's get a little bit more. Mike Shepard joins us now from Washington. Mike, an early start for the day for you. We've got names to frame up and understand a little bit more. Just put some framing around Rubio and Congressman Waltz. I love the line from Politico this morning. That's the sound of a tiny sigh of relief when it comes to Marco Rubio. Is that how we should be approaching a Rubio appointment?
Well, in some ways, because it brings a level of depth and experience to a position that some had wondered which direction will Trump go. Marco Rubio is, as you noted, an avowed China hawk. He is somebody who has been seeking to get tough on Beijing, but he has also been someone who has stood by Taiwan and supported funding the U.S. umbrella of defense for the self-governed island. And this is a bit of reassurance to all the industries that the U.S. depends on in Taiwan as well. Donald Trump, of course, had sent some signals that maybe he wasn't as down with all of that defense for Taiwan, similar to his reservations about Ukraine as well.
It's ironic, isn't it, is that Rubio was actually sanctioned by the Chinese. Just give me a little bit of flesh on the bone with Mike Waltz. He's National Security Advisor, and again, he has military credentials.
Yes, he does. He was a Green Beret who served 4 tours in Afghanistan, combat experience, but he has also been a reliable surrogate for Donald Trump in the House of Representatives. He is somebody who has gotten to know Trump, and I think that's really one of the common threads in all of the people he has picked so far. They're familiar to him, and they are loyal to him, and that is going to help Donald Trump avoid some of the tumult that we saw, especially at the beginning of his first administration, when we saw all of these well-known people, including former ExxonMobil CEO Rex Tillerson, come into high-profile jobs and then quickly fall out with Donald Trump simply because they weren't on the same page with him, policy or otherwise, and didn't understand how he works. So Mike Waltz will come in, as will Marco Rubio and Kristi Noem and others, understanding how the boss, to put it another way, will run his White House and how they can work with him to support his and their own policy agendas. Mike Waltz is somebody else who has been skeptical of Ukraine funding, like Donald Trump, mainly because he wants the U.S. to focus more on some of its problems at home, including the question about the border, for example.
Yeah, I mean, it's going to be interesting to see where they come together on the issues of NATO, for example. And he did, of course, spend time in the George W. Bush administration. So that's the China hawk ascendance, one can say. Can we just talk about the potential pressure then on Iran? If these are hawkish names on the China side, can we expect more pressure on Iran and a more pro-Israel stance that might shape up in the geopolitical stage?
Well, this is certainly something we have heard from both Senator Rubio and Congressman Waltz, that they felt the Biden administration in some ways was handcuffing Benjamin Netanyahu in seeking to go after Hamas and Hezbollah and Iran. Hamas and Hezbollah are two organizations that are supported by Iran. They're designated as terror groups by the U.S. and a number of other countries. And they feel that the Biden team could have done more to back Israel, even though the U.S. under Biden, to be fair, has provided the Israeli government with a huge flow of arms and other support in its defense and in its efforts to go after those groups. But they would like to see more, and they would like to see more direct action and more pressure put on the regime in Tehran.
Shep, thank you so much. That was Michael Shepard in Washington with the latest appointments to the cabinet of Donald Trump, president-elect. Let's look at this from the China perspective. We have our senior Chinese economy and government reporter, James Mega. He joins me now. James, just obviously describing the individuals that have been chosen. I mean, what guide do president-elect, do these appointments give us in terms of the China policy?
I think with regards to policy towards China, especially on tariffs, we're going to really have to wait for the economic appointments as well to become clear. If it's Robert Lighthizer as the U.S. Treasury Secretary, or that's looking less likely now, though he apparently did want that job, or if he comes back as USTR, that's going to be that's going to put a lot more pressure on China, because you have the economic side of the relationship trying to decouple from China very strongly. You also have the diplomatic and military side of the relationship putting being very hawkish on China. If you have people who are coming in who are much more concerned about what happens with markets and how that how putting 60% tariffs immediately on all goods from China will affect financial markets and trade flows. A lot much less hawkish U.S. Treasury Secretary, for example, or USTR would sort of provide a break on some of the more extreme policies that Trump floated on the campaign trail. So we're going to really need to see sort of both sides of that arrangement. But I think what China's looking at, the appointments that have come out so far, they're seeing a confirmation that the U.S. is looking to contain their rise. The U.S. is looking to contain the Chinese economy, and the U.S. is looking to stop how China frames it, they're looking to stop the development of China, which they see as their right. So I think whoever is appointed in the end, they will see a confirmation of their worst fears about what U.S. policy towards them is and what Donald Trump's policy towards them is. But the devil will be in the details.
Absolutely. Just had a conversation with Kit Jukes, and he said, look, if you're gonna weaponize the yuan, which he doesn't think that the Chinese is their current base case. He said, if you're going to do it, make it short, sharp, and fast. But how does China counteract the risk of that max out 60% tariff? We saw some fiscal moves overnight. You and I talked yesterday about excesses in China. So where's the pathway beginning to look a little bit clearer here?
I think on the domestic front, if trade with the U.S. ends, or exports to the U.S. end in some sense, U.S. exports are about 3% of Chinese GDP. So China has to find a place where those goods can be sold, whether that's domestically or whether it's foreign. They have to be exported somewhere else, and that will lead to a reaction from other countries who don't want those goods being dumped in their markets. So if the Trump administration comes in and immediately starts raising tariffs to very high levels, China is going to have to do a lot more to stimulate demand. Just to absorb all the goods that are currently going to America. But again, I think you get an administration that comes in as promising all these things that are diametrically opposed. You can't expel millions of workers and at the same time raise tariffs. It just will lead to massive inflation domestically.
James, thank you very much. James Mega there on the very latest from China. More on Bloomberg Brief in just a moment. Good morning from New York.
do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Front pages from around the world. This is what we've got for you. Other headlines making the news. First up, kick it off with the Washington Post, leading with the Democrat, Ruben Gallego, beating Republican Carrie Lake in the Arizona Senate race. As the last Senate race to be called, giving the Republicans 53. Gallego will succeed retiring Senator Kirsten Sinema. Next up, New York Times, Donald Trump Jr. is joining 1789 Capital. It's a venture capital firm. It invests in conservative-leaning companies. He won't be joining his father's administration in an official role. Trump Jr. has spent most of his professional career working for the Trump Organization. And I take you to a thing of splendor. It depends whether you're on the winning side of this trade or not. There's Bitcoin now. It almost made it to $90,000 this morning. Turnover is at a record at BlackRock. But I want to show you Cameron Winklevoss's tweet this morning, co-founder of Gemini. I mean, they're full. They contributed to Donald Trump's campaign, etc. Now, you've got to actually go to X and listen to this. This is the Phil Collins song, but it's brilliant. Bitcoin is becoming unburdened by what it has been. Now, just watch this. Look at the Bitcoins fly. You got to love it. They donated $1 million in Bitcoin to the @real Donald Trump. That caught my eye this morning. A little bit of levity as we go to a short pause.
days on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our global headquarters here in New York, you're welcome to Bloomberg Brief. I'm Manish Cranny. Let's set your agenda. The bond bears are reawakened as the cash reopens. Stocks pause their gains, while Bitcoin barrels towards $90,000. A Fed speak marathon. Governor Waller is set to kick off a host of remarks from Fed officials this week. And look out, the China hawks are in ascendance. President-elect Trump appoints Senator Marco Rubio and Representative Mike Waltz to his cabinet. Good morning. Stocks are moderately irked, down 0.25%. They didn't quite strike out yesterday. We're just pausing here. The Mag 7 dipped yesterday, NVIDIA and Apple. But JP Morgan still say, look, this is going to be a home run. Team USA will take it home. Take your mind back to 2016. And 2016, by the way, the Russell went up by 14% by Christmas. This was a powerful rally in the first Trump era. And Evercore say, this bull market is still in its infancy. So pause for breath. Why is it pausing? Let me show you day one after Veterans Day. The futures prices were down yesterday. Yields were rising quite considerably in the equivalents. But look at the short end of the curve, up by 5 basis points this morning. We wait for the CPI data tomorrow. There's an uncomfortable truth about what 3.3% on core CPI might really mean for the Fed. But the front end is locking and loading higher this morning by 5 basis points. Let's ask somebody who's been through a few cycles of politics and markets. It is Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. Good morning.
Good morning.
So I wouldn't say the bond bears are viciously reawakened, but certainly we've come back from Veterans Day with a new mission, which is higher yields. Or that's the first blush. This is an uneasy bond market, isn't it?
Yeah, absolutely. We have the components of higher inflation on the horizon with tariffs, with potential fiscal stimulus, possibly more tax cuts. And, this general kind of isolationism that could cause us. An immigration reform could mean labor costs begin to rise. So we have components on the horizon that are offsetting the prospect of Fed rate cuts.
Look, we don't know the timing of the tariffs. We don't know the size of the tariffs. But something that has gone through my mind is that it's a much bigger structural issue if this next administration goes very aggressively, as they have promised, on deportation and immigration. That, Kathy, is perhaps the bigger and longer lasting inflationary pulse.
It is, because as the baby boomers retire out in the U.S. of the workforce, we've seen over the last couple of years since COVID ended that the replacements for those workers have been largely immigrants. And so we don't have the components of a rising workforce if we just stay with native-born Americans. So immigration's been an important part of lifting the economy and overall employment and mitigating some of the wage gains that could drive inflation. So that could have a very long-term structural impact on the potential growth rate in the economy.
Look, we're trading in range at the moment for, 447, 450 on the upside, 425 on the downside. When you begin to see the complexion of tariff from this next administration, is that when you begin to reprice towards 5%, or does this market not hang around and it takes us there in preemption?
I think it gets there preemptively if we don't get any signs that things are going a different direction. So if you assume, as the market is now assuming, that the terminal rate is 3 3/4 to 4%, yes, you add 100 to 150 basis points to that as a kind of 10-year yield average or median over the years. So let's roughly just add 100 basis points. Well, you're pretty much at 5% right there. And I think the market's going to price that in unless we see dramatically.
So 5% would actually be a moderately fair value, all things kind of being equal, if you're working on the basis that you have that higher terminal rate. It's not that it's an extreme move. So could we see a more extreme move than above 5%? What is it that could take you above that parapet?
We'd have to see higher inflation numbers than we're expecting. So we are still looking for inflation to drift down, as it has, but it's kind of stabilized in this 2 to 2.5 area, can't really push lower until that happens towards 2%. We can't have confidence that it's really going to get to target. And that means the Fed can't let up too much, and then we get the 5% fair value.
But then that takes us to Kashkari's comment, which it's not all the way home. This is about inflation. I mean, home is just getting further and further and further away. For the average bond market observer, if you're an equity person, home is getting further away. We're going to hear from Waller, we're going to hear from Barkin, Kashkari and Harker today. How tempered will their language be about the home run to 2%?
Yeah, I think they'll be very cautious. As the data have come in stronger than expected since last September, they have to temper their expectations there. And then, of course, with the potential inflation on the horizon and maybe stabilizing inflation right now, right around 2.5-ish, they have to be cautious about the forward guidance. And there is no real forward guidance yet. And that's what we're all waiting for.
So if I look at the bond market action post the election, we actually had this flattening of the curve into the close of business last week. That will change this morning. There'll be a small tick higher on that. When you look at the market, you want to avoid duration but play a steepener.
Yeah, we like kind of benchmark duration or lower right now.
Okay.
So we had been benchmarked maybe a little higher. Now we're lower because we're thinking that you can't really get short rates down very much from here, and long rates have room to move up if we have more inflation. So I do think you want to play a steepener, but also try to keep your duration relatively on the low end of the range.
The tariff discussion that we have often leaves out blowback, boomerang. You choose your phrase, and that is the much higher risk, isn't it? It's not just what you lay out or what you give out, but it is what the counteraction is to you, and that's where you say it can add to a much more enduring inflation shock.
Yeah, so the tariff gives us a one-time price increase on imports, but then if we get retaliatory tariffs, which would be expected. Yeah. Most of the time when we do this, we get retaliatory tariffs. And then you get an economic slowdown, and you lose investment in the U.S. and you lose growth in the U.S. So it gets to be a very negative kind of cycle that plays out. So you get somewhat slower growth and higher inflation. That's not a great picture.
So Steve Raschuta was in that seat last week, and he chastised me that there weren't many bond vigilantes left, and yet then I hear Nouriel Roubini, who often, of course, refers to the bond vigilantes. But what is it, if we start with the thesis that you've just given me, which is -5%, actually is pretty much fair value for bonds is where they should be if you go on the terminal rate. But if you move into this trade war, tariff world, tax-cutting scenario, what is the number in the bond market that flashes really, really amber to red for the rest of risk?
Oh, boy. That's a tough question.
It is a tough one, but we're going to have to grapple with it.
Yeah, at some point, the market demands a higher and higher risk premium in order to fund our deficits, in order to compensate for inflation. So what is that? Historically, the upper end of that might, if we have a terminal rate of 3.75% to 4%, it might be as high as 5.5%. We'll have to get to, a point where the market really, really pushes back on auctions or really, really pushes back on data or comments from the Fed. If the Fed were to cut and the market didn't like the fact that they were cutting in what they see as a potentially inflationary era, then you could see long rates move up.
Well, look, either way, this next administration is going to have to issue more debt. How much of a conversation are people in the market really having about bond market indigestion? Do they run models of what happened to Liz Truss?
Yeah, they look at Liz Truss.
They look at Liz Truss and they pray, do they?
They look at that experience. I do think the U.S. is in a better position than the U.K. to deal with that. And we're not looking for some sort of, catastrophe in the bond market. But incrementally, they demand more yield, right? More, and especially if there's nothing on the horizon to kind of curb that or to deter that rise in the debt.
So you think a bit more term premium to come?
Could be.
Okay, Kathy, thank you very much. Great conversation. Good to see you. Getting up early, keeping the lights on for us here. Kathy Jones there of Charles Schwab. Coming up on the show, President-elect Donald Trump set to appoint China hawks to the cabinet. Who are they and what does it mean for policy? We'll run you through it right here on Bloomberg Brief.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It is Bloomberg Brief. I'm Manus Cranny in New York. More cabinet picks coming in from President-elect Donald Trump. He's expected to appoint Republican Senator Marco Rubio and Secretary of State, I should say, and Republican Congressman Mike Waltz as National Security Advisor, both from Florida. CNN also saying that Kristi Noem has been picked as Homeland Security. Let's get Michael Shepard's opinion on the individuals and what we know about them from Washington. Mike, good to see you. So Senator Rubio, Congressman Waltz, one could say China hawks in the ascendant. These are pretty punchy picks.
They sure are, and they are also joined by Elise Stefanik, another congresswoman. She's from New York. She is another Trump loyalist who has also made her mark by being very tough on China. She is another part of this growing caucus of China hawks in both parties here in Washington. And we can expect the three of them to work with Trump to carry out this policy of a tough posture against the world's second largest economy. And that includes the tariffs that we've been talking about so much on this show and so many other venues across all of our Bloomberg platforms, but in other ways too. We can look for the U.S. to try to fortify its military in different ways to prepare for the remote prospect of some sort of confrontation with Beijing in some fashion. And the heightened rhetoric, it is certainly something that the U.S. is leveling against China, and China is very aware of this now at this moment. They're seeing the Rubio and Waltz and Stefanik picks in a lot of ways as a worst case scenario for them if they were hoping to ease tensions with the U.S. at any point in the near future.
That's interesting. I was just looking at something that Politico wrote when it came to Marco Rubio as Secretary of State. They said that sound that you hear is a tiny sigh of relief because we've yet to understand where Lighthizer may well appear. Look, we're dealing with them as China hawks, but this has got implications. Trump is leaning into the Senate and leaning into Congress to take people for the administration. This is going to present other issues in terms of leadership battles on Capitol Hill.
It sure will. And in fact, in the House, we still don't have an outcome in terms of which party will control the chamber. And that will pose a challenge for whoever ends up being the House Speaker if it stays in Republican hands. We saw over the past year just how difficult it was for Speaker Mike Johnson to maintain control with a very narrow margin. He's already taking two key Republican lawmakers out of the House. And if the margin is still in Republican favor, but much narrower, Mike Johnson will have very few votes that he can afford to lose if he is reelected Speaker early next year. So this has some implications for whether Trump can advance his agenda through Congress in the early part of the year before special elections are held to fill those seats that are being vacated by Elise Stefanik and by Mike Waltz.
So it's a high-wire act, really, into this first 100 days as well. There are consequences with these picks in terms of the prism of Iran and Israel, and they are being shaped and being presented as being very pro-Israel and much more pressure to come on Iran.
Yeah, absolutely. And we can expect from those three foreign policy picks a very muscular posture toward Iran and very, very much pro-Israel as well as it continues to prosecute its military actions against Hamas and Hezbollah, two groups that have been designated as terror organizations by the U.S. and other nations. Another area that's important to note is that these three picks have all expressed skepticism about continued funding and support for Ukraine's war effort against Russia and a desire to perhaps seek a quick settlement, as Donald Trump has pushed for. So we'll want to see how they carry out that policy and how quickly they can actually bring that to bear. Remember, it's only a week since the election. Trump is already forming this cabinet, but they won't take office until January, and then they will still need to be confirmed. We can expect the confirmation process to go quickly with the Senate now in Republican hands, but it will still take time for them to get up to speed and get moving on some of these key issues, including Ukraine as well as the Middle East.
Okay, Mike, thank you very much. Great upsum, Mike Shepard there in Washington on Trump's picks for cabinet. UBS European Conference is in full swing in London. The Finnish Central Bank President Olli Rehn told Bloomberg what he made of the outcome of the US election.
As far as the tariffs are concerned, it's too early to tell what are the specifics of US trade policy of the incoming administration. We know that there will be tariffs in the verbal pipeline spoken of, but we don't know exactly what kind of, and of course, Europe will not be caught off guard this time like last time. Europe will have to give its response, and then we will see whether there is some kind of a negotiating process. The last thing we need now with the geopolitics in very tense situation, war in Ukraine, Russia's illegal war, Middle East burning, the last thing we need now is yet another trade war, especially between allies.
But, Governor, could you see the trajectory of monetary policy changing because of these tariffs? Would there be, for example, less focus on services inflation? That's been one of the big worries of the central bank.
It's service inflation is a concern that's related to wage growth, and wage growth has moderated, although it's still somewhat elevated. Concerning the timeline of the effect of U.S. tariffs, that's going to be medium to long term, and we can only react in monetary policy to economic and developments we know and we see and we feel, and then we react on the basis of our price stability mandate, looking at how best achieve our symmetric inflation target of 2% over the medium term.
Will that be easier to achieve?
Well, in my view, geo-economic fragmentation and higher tariffs, protectionism is by definition inflationary. It would be probably more inflationary in the United States, combined with expansionary fiscal policy supported by tax breaks. But it would have a detrimental effect of the whole world economy, including Europe.
Finnish Central Bank President Olli Rehn speaking to Bloomberg. More breaking news coming from Germany on the process for confidence votes being called. Scholz will seek a confidence vote on December the 16th, and then that will set the stage for an election, probably on February the 23rd. The red headline from a little bit earlier on was that German lawmakers agree to hold a federal election on February the 23rd. So the confidence vote is on the 16th. 18th. That is the latest news from Germany. Well, the latest read on the consumer before the CPI reading comes in. It is Home Depot. That will be before the bell this morning. Dasha Avasanavia joins me now. So Dasha, this is inextricably linked, Home Depot, to an interest rate play. But how's the stock doing? How are the consumers doing at Home Depot?
Well, the stock has had an amazing few months and has actually performed really well, which is surprising given that analysts expect sales in same stores to fall 3% and also in the quarter. So the business is kind of contracting because of interest rates have been high and people are buying homes less and they're renovating their homes less, but the stock has somehow been growing. Probably on expectations that interest rates will be cut, and again, of course, in recent days on the general sort of Trump positivity. So as you mentioned, the interest rates have this kind of amplified effect compared to other consumer goods companies, because it's about, are people remortgaging and then renovating their homes? Are they buying new homes? And on top of that, the company's recently increased its debt burden to 2.6 times EBITDA through its acquisition of SRS Distribution, a trade distributor company. And the company's planning to reduce that debt burden back to around 2. So I expect the markets and analysts will be looking for updates on how it's doing that too.
Look, it's had a nice run into this set of numbers, one can say. Can that endure? That's going to come down to the outlook. And also, you and I were chatting about it. It's about the debt profile of this company and whether that can be materially lowered.
Exactly. And it's about, like with all the consumer goods companies, it's about how well is this company managing its a very difficult environment, very sort of stingy consumers that are delaying spending. And how are they operationally managing the bad times in anticipation for the better times when interest rates eventually ease off.
Okay, Dasha, thank you very much. Let's see what the numbers are as we go through the morning. Dasha Afanasieva there on Home Depot. One of the Trump trades personified, it's on fire. It's given a little bit back this morning. It's Bitcoin. We were barreling towards that 90,000 level, and it just shows you the scale of the volatility. We've come all the way back, but it's been romping home over the past 6 days. Digital assets worldwide are now worth more than $3 trillion. My favorite line is from Chris Weston this morning. It's in beast mode. And Cameron Winklevoss, the co-founder of Gemini, says Bitcoin is becoming unburdened by what has been. So right now, it's giving a little bit back, but you've got to say this has been a pretty mighty run since the election, up just over 30% now, giving a little bit back. Its peak rally was up 32% since the election. Coming up, it's a huge day for Fed Speak. We'll run you through who's on the docket and also the earnings that matter right here on Bloomberg Brief.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bloomberg Brief. I'm Manus Cranny here in New York. Your day ahead looks a little bit like this. Fed speak galore. You've got Governor Waller, Presidents Barkin, Kashkari, and Harker all making their remarks throughout the day. Will they talk about the target of 2%? Then you've got the Senior Loan Officer Opinion Survey on bank lending practices. That hits the tape at 2 p.m. Plus, we've just been talking about Home Depot reports before the bell and Occidental Petroleum after the bell. Some stocks for you to keep your eye across. Grab, the shares jump from the Asia ride-hailing company, raising its earnings forecast. Live Nation gains as the concert organizer adjusted its operating income beats on the current estimates. And MicroStrategy, well, the crypto-linked stocks, they are having a little bit of a turn lower as Bitcoin comes off that 89,000, nearly at 90,000 level. I'm going to leave you with a quick snapshot of what's going on in the bond markets, because this is where you're just seeing a reawakening post-Veterans Day. Yields are rising. We're counting down to that Fed speak. And then we've got the discomfort of CPI tomorrow. But certainly what you are seeing is a reappraisal of the risks as we know a little bit more about the appointments of Marco Rubio and Mike Waltz to the Trump cabinet. That's it for Bloomberg Brief. Bloomberg Surveillance is up next. They'll take you through the rest of the markets right here on Bloomberg.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the Quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I still think it's the politics that are moving things. I'm still convinced that the market is going to eventually have to push back.
If anything was a referendum this election cycle, it's that Americans are supportive of Trump's agenda on tariffs.
I think the market's taking Trump at his word that we have a massive tariff structure. It's going to hurt parts of the economy.
There is a type of momentum that could develop and get things really wrong in the future.
I think there is plenty in the U.S. that keeps the strong growth narrative alive, but we can't take it for granted.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning from New York City. For audiences worldwide, this is Bloomberg Surveillance. Jonathan Farrow and Lisa Abramowitz are off today alongside Danny Berger and Manus Cranny. I'm Anne-Marie Hordern. We do have the equity markets, the S&P 500 hitting a 51 record high yesterday. A little bit of pause, but everyone is starting to double down on their year-end rally. We have a ton of data on deck this week. CPI kicking off tomorrow. We'll also get a lot of Fed speak with Fed Governor Christopher Waller today. So, Danny, a little bit lower today, but the research says the Trump train is going to continue.
Look, it's not ridiculous to take profits after 51 record highs at this moment, but the sell side is all bulled up. Ed Yardeni says that stocks can go to 10,000 by the end of the decade because of Trump's policies. JP Morgan's trading desk, 2024 will be better than 2016. Mike Wilson, stocks can continue their rally post-election. John Stolfus lifts his year-end target to 6,200. Do you need more? Julian Emanuel also saying that the bull market is just getting started. Anne-Marie, maybe the reason to be worried is because of that, because everyone's saying the same thing.
Because everyone's singing from the same tune, and even though there is some pushback potentially, personnel, policy, what does this mean, and maybe a little bit more of an aggressive stance when it comes to China. Matt, is the bond market back open for business after a Veterans Day holiday, and we see yields on that 10-year pushing higher?
Yeah, they are. I mean, the futures prices were lower, and there wasn't a huge liquidity yesterday, but this morning we come in, it's the very short end of the curve that has spiked a little bit higher. So here's the discussion with Kathy Jones a little bit earlier from Schwab. What is the fair value actually at the moment? Well, if you raise your terminal rate to around the 4% level, she says actually fair value for bonds at the moment is around 5%. Now, we're still 70 basis points away from there. Where are we on the 10s at the moment? We're 435 at the moment, so we're pretty much 70 basis points away. She says that's fair value, and then you can layer on top the tariffs, layer on top the tax incentives of what will go through Congress, and that's when you begin to really reprice the bonds, which then, Danny, could potentially materially challenge the pricing that's going into some of these calls for the year end on equities.
Nouriel Roubini, though, says the bond vigilantes may curb Trump policies. Market discipline is going to be quite quick. He says Trump cares about market discipline, and if bond yields go higher and the stock market corrects and the bond vigilantes say your policies are unsustainable, with the right economic advisors, they're going to warn him against this. The issue is there's a lot of foreign policy hawks, especially when it comes to China, that have been announced, whether it's Secretary of State potentially Marco Rubio, the senator from Florida, or Representative Mike Waltz. We don't know yet who his economic advisors are going to be.
Yeah, and add to that Tom Cotton, Punchbowl reporting as the Senate Intelligence Committee head. And that's why you see Chinese equities off this morning, even though we had more stimulus coming from them. Do these appointments, Anne-Marie, suggest that there is a priority on China, that having China hawks in the White House in top executive roles is important for the Trump administration?
And if markets are concerned now when they see these names, what's going to happen when they see where Robert Lighthizer visor potentially is going to be placed. He is the tariff man. All right, let's get a quick check on where we are again with the markets. They are pausing this morning after a 51 record high yesterday, the S&P futures. A lot of people are saying this has to do with politics, but to Danny's point, why not take some money off the table? As Manas brought us through, we have bond yields rising almost 5 basis points, 4.3530 on the 10-year. We do have a stronger U.S. dollar. That has really taken a bite out of oil. That stronger dollar, also the fact that we do have a little bit of lackluster demand when it comes to China. We will get an OPEC report today, so we will see potentially how OPEC and the cartel is viewing supply and demand. We also have Home Depot hitting the wire right now. Danny, what do you see in terms of the health of U.S. home builders?
Look, it's a decline, but it's better than expected. For full-year comparable sales, the decline they're expecting is 2.5%. Previously, they saw 3 to 4%. EPS growth, or lack of growth, that is, also better than expected. You can see the immediate reaction in the shares there. The reason that they did better this quarter and the reason that they expect to do better going forward, it's about weather. They're seeing more people shop for seasonal items and certain outdoor projects, which is related to the hurricanes that struck in recent months. So the question here is, okay, this is a good result, but is it only for now? We've had mortgages still go higher. Home demand isn't there. Is this just a one-off because of some seasonal impacts?
Look, the other thing in this stock, and I just caught up with Dasha Afasnavia a little bit earlier, and she said the one thing to watch on this stock is the debt level, and this was interesting. In other words, their debt to EBITDA level is around 2.5 times. They want to try and get that down. The guidance that they're giving in terms of the sales growth, they now expect comparable sales to drop 2.5% for the full year versus the previous guidance, which is 3 to 4%. So this gives them a little bit more headroom. It's a little bit of an improvement in terms of the guidance that we originally had. So that is then pushes into their debt issues for them on that 2.5 times debt to EBITDA ratio.
And many U.S. consumers, as you both brought up, are just waiting to go out, buy homes, because they want to see the direction of the Fed, like all of us. And we potentially will get some of that this week. We'll hear from Jay Powell on Thursday. Coming up in the program, Christian Mueller-Glissman of Goldman Sachs. The stock rally takes a breather. Ed Mills of Raymond James on Trump's cabinet picks. And Tom Steyer of Galvanized Climate Solutions on the energy transition with Trump in the White House. We begin this hour with stocks on pause after 5 days of gains. Treasury yields rising as investors weigh inflation risks under a second Trump administration. Christian Mueller-Glissman of Goldman Sachs writing, continued increases in bond yields might result in some reflation frustration for equities, in particular if too rapid. Christian joins us now. Christian, very good morning to you. Thanks for joining us. How counterintuitive is that? For the past few days, weeks, we've seen a rip-roar in these small caps. At the same time, bond yields remain elevated.
Yeah, no, I think you have a few things that are currently looking a bit weird. I think to some extent there's a lot of growth optimism. You are still somewhat late cycle, and there's no worry about inflation. There's no worry about like rates potentially pushing up too much. And I think we're a bit similar to 2021 in that regard. I remember like initially when the Fed was saying that inflation might be transitory, the market really saw this as a super positive backdrop where rates are anchored, real yields are anchored and possibly going lower. That's very good for equities, that's very good for Bitcoin, it's very good for these type of assets. And there's a very similar template right now. The risk is twofold. First of all, at some point, the market needs to reprice bond yields, and that can be either the speed that the repricing is too fast, and it's already been a big move, or that's the drivers, like that you shift maybe a bit away from break-even inflation to real yields. And that's what we're watching in particular. Our real yields are starting to go up, and that might become a bit of a headwind.
Christian, I want to stick with small caps, which Anne-Marie brought up so rightly, because in the small cap index, in the Russell 2000, a quarter of firms don't earn enough to cover their interest rates. Surely if we have higher yields, or at least somewhat higher than we're used to, and they don't come down as much, this is not something you can buy. So what wins out? Is it the rate risk, or is it deregulation and everything sunny for small caps?
I think you answered it already to some extent. The market is betting on deregulation. The market is betting on lower taxes, on animal spirits. And we have to consider that some of the financing from these type of small and mid caps might be locked in. They might not directly suffer from rising longer dated rates. And importantly, like currently the expectation, as I mentioned, from market is that, yes, this reflationary shift might make the Fed cut rates a bit less fast, but there's no expectation that rates will actually be increased. I think this is the big risk for next year. If you do actually see the market see inflationary pressures pick up, and you need to reconsider the risk of rate hikes. That seems to be a very high hurdle right now. And I think that's fair that the market is looking at this as a very high hurdle rate. But if you do actually get a shift back to rate hikes, it could really kind of go against that bullish sentiment right now.
Well, all we really have to go off at this moment of what actual fiscal policy will look like is what Trump said on the campaign trail and what his appointments are so far. Christian, as you're assembling a cross-asset portfolio, how much does it make sense to look at appointments? And let me give you one example. Energy, national security, Mike Waltz, that's what the reports say. And in that, you have an Israel and Iran hawk who has said that Israel should indeed target oil infrastructure in Iran. Christian, do you look at an appointment like that and say, maybe it's time to go long oil, maybe it's time to price in geopolitical risk? Do you trade off of those types of things at this very moment?
I think as an asset allocator, you want to be very careful about being pushed around too much by geopolitical risk. I think the first line of defense in your portfolio should always be diversification before you actually shift things around, before you actually put on hedges. And I think a well-constructed portfolio that has some real assets in there, that have some inflation protection, maybe you have a bit of energy exposure in some shape or form via equity, via credit. I think that would be the first port of call, maybe avoiding areas that are particularly exposed to the oil price. But I would not necessarily say that it's a good idea to act without any significant details on policies and any more information on the actual appointments getting into the job. It's a bit too early, but I think what I would say, though, is after such a strong rally, what we're discussing with clients is looking into year-end hedges, just locking maybe some of that performance in, selectively trimming, maybe looking more at optionality to stay invested.
Let's just build on that, Christian. Good morning. You talk about the upside maybe being a little bit contained. What level of containment is it? Because you're still a seller of far out of the money calls, and you want to buy near at the money calls. So just give me a perspective in terms of how far out are you selling, because that's going to be the top end of what you think, of the real extreme of what you think this market can do, and where's at the money that you think we'll get to?
Yeah, I think like we are kind of, from a kind of strategist point of view, we are getting close to our targets that we had for the year and are shooting through those. So I think what we've been recommending, you're right, was to sell maybe far out of the money calls into year end, let's say 10% or so, and buy at the money calls and protect yourself for another 10% rally. But after that, it will be much tougher. I think we have to be clear that there is a real valuation challenge that we're facing for next year. Like Schiller PEs are kind of pushing higher and higher, and I think they were already increasing in the Goldilocks regime, which we had in the last 18 to 20 months. So now they're pushing higher in the reflation regime that we have, because so far bond yields and real yields are not moving higher. So next year, we really have a few more headwinds for equity returns. And I think this is where it's coming from, this idea of maybe overwriting far out of the money upside and buying with that shorter dated upside at the money.
Look, you made it very clear that it's a well-constructed portfolio with a few hedges to maybe take profit on what you've seen. Gold is something that you like as an allocation. Now, it's come back, obviously, since the election result came in. You see it more as a geopolitical hedge.
I think you're right. I think gold actually has one of the best track records, one of the best hit ratios to protect you in geopolitical risks, somewhat better than oil. So as you were saying earlier, there is problems potentially related to oil price volatility and uncertainty. Maybe gold will be a better hedge, because gold has other optionalities. I mentioned earlier this kind of reflation where real yields are not going up, this reflation where real yields might actually initially go down because there's a very high hurdle rate for the Fed to actually hike. In this type of setup, gold could be very well supported. And I think there's also a lot of talk about, as I'm sure you heard, the dollar strength being a target of policies around the Trump administration. Again, a weaker dollar is very good for gold. So there's plenty of interesting risk scenarios for the portfolio where gold can help you, so we like gold.
Well, that weaker dollar is not happening today. The Bloomberg Dollar Index hitting its highest level in a year. Christian, some of his policies mean a higher dollar, even if the former president has talked about, the future president, that he would love a weaker currency. We thank you for your time this morning. Christian Mueller-Glissman of Goldman Sachs. Let's get you an update now on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Hackis. Hey, Yahira.
Hi, Anne-Marie. Lawmakers in Germany have reached an agreement to hold an early election in February. That's according to government officials familiar with the talks who say the federal ballot, which was originally slated for September 28th, is now expected to be held on February 23rd. The expedited timeline coming after the country's governing coalition collapsed last week when German Chancellor Olaf Scholz fired his finance minister over a long-running dispute about the German economy. Meanwhile, Home Depot's full-year forecast for comparable sales beating estimate. Shares are now higher, nearly 2%. Net sales for the third quarter gaining 6.6% year over year. The CEO saying the company got a boost from better weather with demand for seasonal items and outdoor projects. The company also saying there was added demand after hurricanes struck the South in recent months. The stock is up nearly 20% year to date. And Republicans are inching closer to a full sweep on Capitol Hill. According to the AP, Republicans have won 214 seats in the House to 205 for Democrats. It takes 218 seats to capture a majority. In the Senate, Democratic candidate Ruben Gallego has defeated Republican Carrie Lake, bringing the total to 53 Republicans and 47 Democrats. The GOP is expected to vote on a new majority leader this week. That's your Bloomberg Brief. Anne-Marie?
Thanks so much, Yahira. Up next, Trump's cabinet takes shape.
One of the biggest issues for so many Americans was the economy, and the president was talking about unleashing economic prosperity. Through the EPA, we have the ability to pursue energy dominance.
What personnel tells us about policy? That's coming up next. You're watching Bloomberg Surveillance.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
Good morning. Equity futures this morning hitting a little bit of pause, but that Trump trade really continues. Look at the research across the street. We hit another record high yesterday. Torsten Slok said a normal year, you get 18 record highs. Not 2024. This year has been anything but normal. Yesterday, 51st record this year. Under surveillance this morning, Trump's cabinet taking shape.
One of the biggest issues for so many Americans was the economy, and the president was talking about unleashing economic prosperity. Through the EPA, we have the ability to pursue energy dominance, to be able to make the United States the artificial intelligence capital of the world, to bring back American jobs to the auto industry, and so much more.
Here's the latest. Donald Trump announcing a slew of cabinet appointments. The president-elect is tapping Lee Zeldin to lead the EPA, Mike Waltz as National Security Advisor, and according to CNN, Kristi Noem as Homeland Security Secretary. Sources also telling Bloomberg that Marco Rubio is expected to be announced as Trump's pick for Secretary of State. Ed Mills of Raymond James joins us now for more. Ed, great to catch up with you this morning, especially we're getting a number of personnel announcements coming out of Mar-a-Lago. What do they say to you, especially when it comes to the national security world?
Yeah, Anne-Marie, we're seeing kind of picks coming out in national security, energy, and immigration. If you want to know what Donald Trump's first 100-day agenda will be, look at the team that he's putting together. He is run on this. He is going to lead with this. We are seeing a number of picks that are well-known individuals, at least in Washington, D.C., but also in a number of cases known nationally. So those are the picks that you often lead with, and those are signaling that there are going to be a number of folks that are coming into his cabinet, into his administration, that maybe 6 months ago people would have said, oh, he's never going to get these individuals to join them. He is.
Well, when I look at these names, I definitely think these are hawks when it comes to policy in regards to China. I'm a little bit confused, maybe you can help us out here, about Senator Rubio, because Trump 2.0 was supposed to be a little bit more of an isolationist approach, leaning into the J.D. Vances and the MAGA wing of the party. As far as I'm concerned, Marco Rubio seems to still be a neocon, even if it's a little bit softer neocon.
Yeah, Anne-Marie, I think when you mentioned kind of hawks to China, I have a hard time finding anyone in D.C. who's not. It's one of those true bipartisan issues in Washington, D.C. Marco Rubio is absolutely known for his aggressiveness towards China, someone that has pushed aggressively to have the tech export controls that we've talked to so many clients at Raymond James over the last 6-7 years. When we look at his record, the record of Elise Stefanik, Congresswoman from New York, Mike Waltz, Congressman from Florida, all of these individuals are individuals who voted for Ukraine aid. This is not that kind of isolation as you talk about. This is a very traditional or more traditional role that Republicans have played in a signal that, yes, there's going to be America first. Yes, there's going to be a very different policy geopolitically that Donald Trump pursues, but the personnel is not as big of a break from some of the rhetoric that we have seen on the campaign trail, not only from Trump, but from a lot of his segregants.
So then that means you're left, Ed, with China hawks, as you say, which perhaps all of D.C. is. If it is indeed true that you have someone like Lighthizer, you have someone who's very pro the style of tariffs that Trump has been championing, and then you have immigration hardliners. And as you say, it shows you what the first 100 days will look like. Does that mean the street has it wrong in being giddy and having high expectations that the focus will be tax cuts and deregulation?
Danny, that's a great question, because one of the things that we've been talking about is what's new, what's deja vu under Trump 2.0. And so we're looking at this, and we absolutely will have trade fights next year. One of the questions I have asked is, there is a brewing trade fight that's going to occur with Mexico, not only on immigration, but the Mexico backdoor that allows China to bring a lot of things into the United States tariff-free. If we're dealing with that, at the minimum, we're going to have volatility. Back in 2016, we saw a major market run after the election. We saw financials really soar. Now, there's a lot of tailwinds right now for financials. A lot of clients are asking me about M&A. That probably continues, but you look over the 4 years, most of that move from financial occurred earlier. So those are the debates that we're going to be having over the next couple of months. What can get continued? And when I look at the majorities in Congress, well, Republicans have likely completed their sweep. In the House of Representatives, when we look at things like taxes, back in 2017, when Donald Trump took over in his first term, there was a 47-seat majority for Republicans. When he takes his oath of office on January 20th, that majority might be down to stuff on a single hand. That's going to be very difficult to govern. You might have the majority, but can you govern is going to be the question in the House of Representatives.
Well, as Anne Marie has said, you might have 218 kings walking around. That can shift policy very quickly. Ed, is this a Republican Party that's more or less beholden to Trump in the second term?
I think it's more, Danny, because when he came into office in 2016, there weren't a lot of natural allies in Congress. In the last 8 years, there's been a massive changeover in the makeup of the House of Representatives, in the makeup of the United States Senate. So there's a lot more natural allies. And to the extent that you look at maybe 218 kings, you also don't want to be the 1 or 2 members who stick their head out and get the full wrath of Donald Trump and his potential support of a primary opponent for those Republicans. It's going to be very difficult to keep that 218 together, that fragile flower of consensus. But Trump being the head of his party is going to be a huge push towards unity in the House, which is not what we've seen over these last couple of years when Republicans have had a small majority, but no leader to coalesce them at the national level.
Good morning to you, Ed. It is, of course, COP29. That's ongoing at the moment in Azerbaijan. And then I look at the Trump pick, Lee Zeldin, to lead the EPA. Energy and drill, baby, drill, along with rolling back some of the commitments that Joe Biden made over COP, are going to be front and center here, aren't they?
Manus, the Trump administration is not going to be a strong participant in future COPs. The Trump administration is going to pull out of the Paris Accords much quicker than they withdrew from previous global climate change accords. That's what he's promised. We look at changes from the Supreme Court on regulation. When we are going to look 4 years from now, there's going to be a significant walking back of a lot of things in the Clean Air Act and the Clean Water Act because of legislative and judicial change. Then we look to Congress, and one of the things that is a low-hanging fruit item is energy permitting reform. A lot of energy projects in the United States take too long to build. The United States Congress is going to speed that up with this Republican majority, but they would have sped it up even if it was a Democratic sweep, because of the AI energy demands that are out there, pushes folks to say, let's get these projects built. And we have the Inflation Reduction Act that provides huge tax credits. So that is actually going to surge over the next 4 years because of the election and also regardless of the election.
Right, Ed, and we do have the Biden administration now in these final days really trying to shore up some of those environmental plans before Trump 2.0 takes hold. Ed Mills of Raymond James, thank you so much for joining us this morning. Keeping on climate and the environment, Tom Steyer of Galvanized Climate Solutions on the clean energy transition under Trump. That's coming up next. You're watching Bloomberg Surveillance.
there are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Good morning. A slew of data on deck this week, starting off with CPI tomorrow. We do have equity futures this morning pulling back, but just ever so slightly. This has been a rally for the history books. This factoid got me. This is the S&P 500's best start to an election year since 1936. So everyone's a little bit concerned about potentially what these policies might mean, but Danny, you said it great. The Trump trade continues. You see what Wall Street analysts are doing, what economists like Ed Yardeni are saying. We're hovering around that 6,000 mark. He's saying actually it's going to go higher when it comes to year end. So maybe just taking a little bit of money off the table. In the bond market, we do have the bond market back open for business today, Danny, after Veterans Day hitting a pause. Yields going higher once again.
Maybe this is the true way that they should go. Yields went higher immediately after the election, but they ended the week lower. There is this real concern. We don't know how to model 7 3/4 of deficit being added under a Donald Trump, as is the estimate from the Budget Responsibility Office. If you have that scenario, you have more bond issuance. Will investors be as willing to absorb it? Do you need higher rates on the long end? And what does that mean to have rates moving higher as the Fed is cutting? It's like the opposite of the Greenspan conundrum.
And then when it comes to what's going on in currency markets, our guest just moments ago was talking about the fact that actually Donald Trump wants a weaker currency, but his policies are dictating the complete opposite. The dollar has been strengthening across the board when it comes to G10.
It has indeed. And Kit Jukes from SocGen was with me a little bit earlier on. And ironically, he's of the opinion that we're pretty much nearly at peak dollar. It's going to come faster and quicker than we all think, probably by Christmas time, by the end of the year. I sort of pushed back on that and I said, well, like, why do you think we're going to peak out then? He said, well, take your mind back to 1985. That's when the Plaza Accord was signed. He said, Trump is not going to go down that road. He will make a lot of noise about the dollar. He'll make a lot of noise about world trade. But at this stage, Kit was very reluctant to say that he thought it was a 1985 redux where we go for something as grandiose as that, which was the Plaza Accord. It was in Paris. It's not there. And he says if China is going to actually devalue their currency, do it soon, do it quick, do it large. But he doesn't say that's the base case either for China.
Or we get a Mar-a-Lago Accord and everyone will be descending on Palm Beach. All right, under surveillance this morning, Republicans on the brink of taking control of the House. The Associated Press finding the GOP leading 214 to 205 with 218 seats still needed for a majority. The fact that we are still counting ballots blows my mind, but that's where we are. In the Senate, Republicans are set to hold a leadership vote tomorrow. When it comes to the House, what I find so interesting is that Republicans are almost at the brink. But even before they get there, they're going to have to run special elections now because of Donald Trump's policy picks. You have New York Congresswoman Elise Stefanik being clipped from her New York seat. She's going over to the UN. And then you have Mr. Mike Waltz of Florida. This was Ron DeSantis' old seat. He potentially is going to go into the administration. The reports are he'll be the national security advisor. So their majority is getting slimmer every single day, and they haven't even actually got it yet.
And history has shown us that very slim majorities by the GOP in the House has led to a lot of infighting and a lot of struggle to get different legislation passed. The Wall Street Journal had this fascinating story yesterday, basically saying that there's a new dispute rising among the Republican Party, and that is agreeing on what they call the number, and that is the maximum budget deficit that they're willing to pass on. You're going to have this real fight, an interesting fight, I think, play out between the deficit hawks and the tax cutters, between the populists and the sell-side conservative, the conservatives who want to make sure that the deficit is in control. What does that mean? Is it a Trump acting as referee, or is it a real divide between the Republicans?
Or it's the markets. Former Treasury Secretary Larry Summers said the market is going to have to start dictating and educating to lawmakers what potentially it means when you start reaching your fiscal cliff and too high of deficits that maybe the country cannot afford. The darling of the Trump trade has been Bitcoin, and that's nearing $90,000 as traders bet on a boom under President-elect Donald Trump. The overall value of the crypto market rising above its pandemic-era peak, Bitcoin jumping about 32%, Manis, since the U.S. election.
I mean, this is brilliant. The whole value of the crypto world has risen to over $3 trillion. My favorite tweet of all was this morning when I came in and saw the Winklevoss twins coming out. Cameron Winklevoss, one of the twins, the co-founder of Gemini. Bitcoin has become unburdened by what has been. Of course, he was a contributor to the @Real Donald Trump campaign. He gave him $1 million in Bitcoin donations. But you know, you see this unleashing of if you want to understand the unleashing of animal spirits, it is in the Bitcoin area. We were trying to make it to $90,000 this morning. We didn't quite get there. It's come off. But you're looking at a rally of nearly 30% since the election.
And this is the hope that maybe there'll be deregulation in the crypto world, but I don't see the tea leaves yet that is agenda item 1, 2, or 3 for this Congress.
Can we also just take a step back and talk about the irony of this? Bitcoin is supposed to be like the anti-fiat currency, and it's rallying to near 90,000 on a decidedly governmental process. So maybe the thing we take away from this is like, hey, maybe crypto is becoming more fiat. Maybe we're going to have a national reserve, and like the dream of Bitcoin being something separate from the government isn't as real as we thought.
Listen, there are moments in history when Damascene moments occur, and this could well be one of those under Donald Trump as to whether there is additional credibility. And, you know, does Gary Gensler go? Who replaces that? You know, there are a number of things that can drive the crypto world to new levels as well.
I think almost for certain whether or not Trump was winning or Harris, SEC Chair Gary Gensler was on his way out. Outside the United States, China planning to cut taxes for home purchases in its latest fiscal stimulus push. Sources telling Bloomberg regulators are working on a proposal that would allow mega cities to cut the D tax for buyers to as low as 1% from a current level of as much as 3%. This is something, Danny, potentially to try to revive the doom and gloom of the Chinese property market.
Even so, you look at just what Chinese markets are doing this morning, and they're not impressed. Markets have been impatient, waiting for details and stimulus. We also had a package announced on Friday. All of this suggests, between Friday and today, that China had been waiting to see the outcome of the American election to really start unleashing more stimulus. But perhaps that they are holding back firepower to see what the American policies actually look like. And maybe that's what this market is reacting to, Manis, that there could be more to come, but we need to wait and see what actual tariffs and actual China policy takes form.
And I was itching to know what kind of position the Chinese have in U.S. Treasury bonds. And so I was chatting to James Meg, our correspondent in China, and he said basically it's down $250 billion over the past 3 years. But that has been a slow and incremental burn in a reduction on the reliance on U.S. Treasuries. And indeed, private investors ahead of the election did that. And this is what we're going to talk more about now, which is once the Chinese see the size and the scale of these tariffs, what is the risk then that you will hear this verbiage about the weaponization of China's holding of treasuries? I mean, it's like a drum roll. I've been banging it for like 20 or 30 years. But basically, that is the next thing that you will see stories written about. But that's the slow dissipation, down $250 billion over the past 3 years in terms of holdings.
All right, let's turn back to U.S. politics. Donald Trump's next cabinet beginning to take shape. Trump picking former New York Congressman Lee Zeldin to lead the Environmental Protection Agency. Trump saying Zeldin will, quote, ensure fair and swift deregulatory decisions. They'll be enacted in a way to unleash the power of American businesses. Joining us now is Tom Steyer, former Democratic presidential candidate, of course, and the co-founder of Galvanized Climate Solutions. Thank you so much for joining us around the table. So we're going to get a Trump 2.0. Potentially, they're going to roll back a lot of the work the Biden administration did when it comes to the energy transition. How much does it matter? Because the market is already off to the races.
Well, let's talk for a second about what's really driving the energy transition, which is economics, prices, and markets. Over the last 4 years, solar prices have gone down by 60%. Solar sales have gone up 4x. If you look at what's happened to batteries last year, just in 1 year, they halved in China. The price halved. If you look at what's going on in terms of EV sales, we look at it in the United States, still going up, but not going up that fast. If you look at what's going on in China, they went up 11% month over month. They went up 50% year over year. When you look around the world, what's going on is abundant renewable energy. That is actually the story. What we're seeing in the world is a huge move to renewable energy and the energy transition happening much faster than people in the United States understand, while we're talking about oil and gas, which is basically a stagnant market.
So what does that mean to have a drill, baby, drill policy at a time where you already have peak oil domestic production in the U.S. and you have this transformation you're talking about? So
let's put some numbers on it so that we can really understand what we're talking about. The U.S. is the biggest oil and gas producer in the world. We do about 13.5 million barrels a day. If we do drill, baby, drill, we could take 13.5 and move it to 14. In the context of the world oil market, we're doing about 102 million barrels a day. That is not, this is a stagnant market. Even OPEC thinks that the total amount of oil sales will go up by 8% in the next 25 years. Solar sales went up 4x in the last 4 years. So what we're really seeing is an exploding clean energy market. We're not running out of oil and gas, but what we're seeing is an abundance of renewable energy and an abundance of new technologies that are competing on price. You know, I wrote a book, Cheaper, Faster, Better, How We Win the Climate War. And really, that's all we're seeing is market forces, business. How do you win? Cheaper, it's cheaper. Faster, it's faster and better. And so when we look around the world, governments can't repeal markets. China can't repeal markets. Neither can Donald Trump. What we're seeing is people around the world acting based on prices, what's in their own interest, and what's the best product.
There is another large source of energy demand that's really ramping up quickly besides the renewables, where it goes in tandem with the renewables, and that's the energy needed to power AI. Basically, the amount equivalent to large cities needed to power even just Meta's AI demand. When you look at that and you look at the Trump White House push or the coming White House for deregulation, is there red tape that needs to be cut anyway to allow for this huge source of energy that's going to be needed to power the future?
Of course there is. I mean, when you look at the United States, we are very, very slow in terms of permitting. We're very, very slow in terms of adding new clean energy products or oil and gas projects to the grid. So yes, we have a very slow-moving process because so many people are allowed to weigh in. It just takes so much time. And of course, we should be moving much faster. But when we really look globally about where we're talking AI can move U.S. energy consumption by 20% over the next decade. That's a huge move for us. But if you look around the world, if you see what's happening in Asia, Southeast Asia, and South Asia, like in India, it is growing exponentially. They're going to do 5 times as much electricity by 2050, 5 times as much. And so when we really think about what's going on in terms of what's driving prices, what's driving volumes around the world, where the real business is, what we're seeing is it's really in renewables.
And it's interesting, just as we touch on that oil subject, OPEC has released their report. Oil consumption is down 18% since July. This is the 4th consecutive cut that they have in terms of demand, and that's to do with China. I want to focus on one of the things that irks Donald Trump, we know, is other people eating America's lunch. And any move that he makes to step back on IRA, which is done very well in the red states, by the way.
Overwhelmingly in the red states.
Overwhelmingly in the red states. So just how aggressive a pullback is there going to be? Because I can tell you what, there's a lot of European and global CEOs sitting out there who are going, I'm ready to eat your lunch. If you don't want to build this business, we're ready to do it.
Look, that is the point I'm trying to make, which is America has to compete. America, if we're going to, this transition is happening. America should be leading it. This is an absolute necessity for us to be the leading economic country in the world, the leading political country in the world. And I think it's going to be clear, no matter how Mr. Trump feels about what should happen, what is happening is this transition, and American companies can absolutely dominate here. But we have to choose to do it, and we have to put the money into it, and we have to put the manpower into it. So I look at this as a great chance for business, and it's just business. This is just about what is cheaper, faster, and better, and that is traditionally what Americans have done really well at.
Well, then, what level of stimulus could we see from him? What level of incentive could we see for these areas? He's been very heavy on the rhetoric against a lot of the incentives that were in the IRA, etc. So how does he temper that? How does he balance this?
I really think that what's going to drive this is American business. That it's not. Of course, the incentives of the IRA were important in terms of deployment of solar, of wind, and the sale of EVs. But the truth is, all of those things are going to keep happening globally. All of those things are going to keep happening in the United States. I mean, if you think about the idea of solar prices going down by 60%, that would be oil going to $32, from $80 to $32. That didn't happen. But you know something? It's not stopping down 60. We'll go down another 60%, and it'll be at the equivalent of $15
Tom,
per barrel of oil. That's dominance.
If the private sector is doing this already, though, and there was concerns that spending too much at a time when inflation at one point during the Biden presidency hit more than 9%, then what was the point of something like the Inflation Reduction Act? The former president, future president, continues to talk about that he's happy with clean energy. He has someone like Elon Musk surrounding him, but he thinks it should be driven by the private sector.
It is going to be driven by the private sector. It is driven by the private sector. I think when I think about the Inflation Reduction Act, I think about an attempt to try to subsidize companies that are clean to try and put them on a level playing field with companies that are polluting. That's really how I think about it. But over time, when these prices come down, the need for subsidies goes away. And that's really let me give you one example. Over the last 3 years, Texas has tripled the amount of solar it uses. Texas. They are by far the biggest wind producer in the United States. The 4 biggest wind producers in the United States are all deep red states. They're not doing it because they love the concept of renewables. They're doing it because it's cheaper, because it's good business. And that's what we're seeing is, in fact, cheaper, faster, better. Markets, prices, economics. That's what's driving this world. People are talking, people are saying things, but really what's going on behind the scenes is just, you guys were talking about the dollar. What's driving the dollar? What's driving interest rates? Prices and markets. You can't revoke them. Right. We're in a world where, in fact, we are going a very straightforward way, and we can talk about it, and the sentiment can move back and forth. But if you look at the first Trump administration, actually clean energy did really well.
It did.
Yes, there was a lot of rhetoric, there was a lot of anger, there was a lot of emotion, but the fact of the matter is the world just kept powering right through it.
Tom, we thank you for your time this morning.
It's great to see you.
Tom Steyer of Galvanized Climate Solutions. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Hackis. Hey, Yahira.
Hi, Anne-Marie. An app developed in China is taking Apple to court over the tech giant's App Store practices. A Chinese court agreeing to hear a lawsuit from Beijing Body Reader Technology, which is seeking over $400,000 in damages after Apple pulled their app from their store in 2020. Closed-door hearings in the case may wrap as soon as this week, according to a person familiar. It marks the first time Apple is fighting allegations from a Chinese developer about its platform practices. Meanwhile, a Spirit Airlines plane was struck with bullets as it was landing in Haiti's capital yesterday, prompting the closure of the country's main airport. One flight attendant was injured before the flight from Florida diverted to the Dominican Republic. The company will stop service to 2 of the country's airports, while American Airlines and JetBlue also suspended operations to Haiti. The country is engulfed in political turmoil and struggling to respond to gang violence. Meanwhile, the Jennings Creek wildfire in New York and New Jersey rages on despite Sunday night's quarter-inch of rainfall. According to the New Jersey Forest Fire Service, as of yesterday, the fire was 20% contained, spanning 3,500 acres. But it's not the only one in the area. Several fires burned throughout the weekend along the New York-New Jersey border due to historically dry conditions across the region. No evacuations have been ordered as of yet, but New York Governor Kathy Hochul announced that since the start part of the fires, roughly 5,000 acres have been burned. That's your Bloomberg Brief. Anne-Marie?
Thanks, Yahira. Up next, a housing crisis in America.
Look at housing affordability, still a problem. Housing starts are low, building permits are low, existing home sales are low. You have a problem today. Shelters, you're not getting enough home building.
That conversation coming up next. You're watching Bloomberg Surveillance right here on Bloomberg TV.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the world's second largest economy with a growing influence, but geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from New York. Under surveillance this morning, a housing crisis in America.
I think shelter's a really big deal. Look at housing affordability, still a problem. Housing starts are low, building permits are low, existing home sales are low. You have a problem today. Shelters, you're not getting enough home building. You look at all the home builder earnings, pretty rough because they're subsidizing mortgages, they're subsidizing houses through their bottom line. Listen, I think you got to get the rate down. You got to get housing moving. That'll bring shelter inflation down, but that's been the thing that's sticky.
Here's the latest. U.S. mortgage rates hovering near their highest level since July following a 6-week surge. Lingering shelter inflation driven by low supply, high construction costs, having a major impact on housing. Bloomberg's Drew Redding joins us now. And Drew, we also just got a read on the housing market when it comes to the Home Depot earnings report. What are you looking at?
Yeah, so it was a good quarter for Home Depot, a beat and raise on the top line. It looks like they got a little bit of help from the weather and saw some improvement in seasonal categories as well as a boost from some of the recent hurricane activities. That being said, we still think that the company is likely to communicate during their earnings call that the backdrop for repair and remodeling remains choppy. You still have cautious consumers. You have housing activity, which is at depressed levels, and we're seeing an ongoing pullback in big ticket discretionary spending.
Is there any degree, Drew, where some of this was just put aside because of political uncertainty and consumers wanted to know how things shape up? Already you've seen in risk assets, animal spirits are reawakened. Is that likely to have any sort of read-through on consumer appetite for big purchase items?
Well, we have heard from some of the home builders who have told us that in their conversations, buyers, home shoppers were putting off purchasing decisions because of the election. You know, we're a little bit skeptical that the election is causing such a pullback in sales. We think it's really broader economic uncertainty that remains out there, you know, that's leading consumers to pull back. So, you know, we think maybe to some extent we're seeing that, but I don't think that really explains the broad weakness we've seen in housing.
Well, maybe the thing that explains it, Drew, is you had a Fed that cut 50 basis points, and yet you had mortgage rates, which moved higher. Anne-Marie mentioned this, above 7% for a 30-year fixed mortgage at this moment. What does that do to psychology, to consumer psychology, that we got the cut in rates that we wanted, yet long-term rates, mortgage rates, are moving the opposite direction?
Yeah, the fact that we just can't really get any stability in rates, I think, is really impacting consumers. We saw rates come down as low as 6% in September, and we saw a corresponding rebound in housing activity. But in, you know, just a couple of weeks, rates were back up 90 basis points to, you said, 7%. And that puts housing out of reach, homeownership out of reach for many people. You know, mortgage rates certainly get a lot of attention, and, you know, what happens with them will be key in dictating housing demand. But at the same time, you have to remember that home prices are equally as important to that affordability equation. And we've got home prices that are up 50% from pre-pandemic levels. And just to kind of highlight how out of whack home prices seem to be, we did an analysis that shows that in order for monthly payments relative to income to return to historic levels, you'd have to see property values fall about 30%.
Drew, is this also why we have this lack of supply right now in the market as well, on top of the fact that it's difficult for people to get on the housing market?
Yeah, I think part of the supply situation, which has certainly been one of the key themes in housing over the last several years, part of it has to do with the fact that a lot of current homeowners have mortgage rates that are well below the current market rate. A majority of rates out there are actually below 4%, so, you know, there's a disincentive to move. But from an inventory perspective, what we're actually starting to see is in some markets in the South, namely Florida, Texas also comes to mind, we're starting to see that inventory reverse. So we do think that could help transaction activity, but we also think that it could put a little bit of pressure on pricing.
Bloomberg's Drew Redding, thank you so much for your time this morning for a look at what is going on with those Home Depot results and the housing market. Coming up next in the program in the 7 o'clock hour, Jim Caron of Morgan Stanley, Terry Haynes of Pangea Policies. We'll look at some of the personnel announcements coming out of Mar-a-Lago. Bob Diamond, former CEO of Barclays, now with Atlas Merchant Capital, and David Tinsley of Bank of America to give a real sense on the health of the consumer. You're watching Bloomberg Surveillance this morning alongside Danny Berger and Manus Cranny. I'm Anne-Marie Hordern.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
In terms of how we should deal with the challenges that are, facing the world and also internally, I think it's just an opportunity also, an angle. And you could see that in a lot of activities that are picking up in this region, simply because it's a region that is actually a bright spot amongst very few in the world today. And people always talk about the flavor of the month. Actually, I don't want to sound too, large-headed, but actually we will be the flavor of decades. We are determined, we have long-term plans, and we are very clear and committed on our commitment to the investment community at large. I'm not talking about one individual country, but at large in the GCC, that we mean business, that we are willing to take every step possible to make it easier for investors to do business in the region, that we are willing to do a lot of structural changes, including actually making it very predictable, very consistent policies.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The Federal Reserve, they have an easing bias. We found that out last week.
We might not get rate cuts as aggressive as the Fed really said just 6-7 weeks ago.
I think that they're really still quite restrictive. I think that they don't want to get ahead of themselves.
I think everyone needs to have a little bit of humility and really focus on the economy and the data.
We have strong growth, we have high inflation, hard to keep cutting.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning from New York City. For our audience worldwide, this is Bloomberg Surveillance alongside Danny Berger and Manus Crenny. Today, John and Lisa are off. I'm Anne-Marie Hordern. We do have a rally, what they're calling for the history books. This is the S&P 500's best start to an election year since 1936. Yes, equity futures this morning are taking a pause, but the Trump trade continues. Yesterday, S&P 500 ending the day hovering near the 6,000 mark. We're nearly close to Ed Yardeni's near-end rally target, which he had to lift because yesterday was the 51st record this year, Danny.
Yeah, Ed Yardeni thinks that equities by the end of the decade, because specifically of Trump policies, can go to 10,000. John Stolfus also had a new street high with 62,000. I thought one of the more interesting calls was from JP Morgan's trading desk saying, this is different than 2016, and it will be stronger and a bigger rally because in 2024, it is just the U.S. There's nowhere else to go, especially if there's tariffs. This will be the strength of the American market. The head scratcher, though, is small caps. Yes, that will do better with deregulation, Manus, but a quarter of the Russell 2000 doesn't earn enough money to cover their debts. And that is a problem, and the market is overlooking it.
Yeah, and this is the point that you've consistently made. I like what JP Morgan said. It's basically going to be a home run. It's going to be Team USA until the end. It's going to be a 20-16 redux. And the Russell put on 14% between election day and the end of that year. And those small caps only put on 16%. So we've done a lot of the legwork. Oil's in focus as well. We've got OPEC cutting their oil demand. Now, this is fast and furious. This is the 4th month of cuts that they've gone. 2024 oil consumption is down 18% since July. And again, they're referring to the slowdown in their top consumer, you got it, China.
And the price, of course, already has been taking hit. But a lot of that has to do with the Trump trade and the fact that we are seeing absolute strength in the U.S. dollar, the Bloomberg Dollar Index hitting a year high today. On deck this week, we have CPI coming in tomorrow, as well as we're going to be hearing from Fed Governor Chris Waller today. So that's where we are when it comes to the state of play for the equity markets and across asset. Coming up on this program, Jim Karen of Morgan Stanley as the equity rally pauses, Terry Haynes of Pangea Policy as Trump solidifies his border and security picks, and Bob Diamond of Atlas Merchant Capital on the outlook for financials during a second Trump turn. We begin this hour with stocks, as we've been saying, on hold as investors weigh the impact of potential Trump policy. Jim Karen of Morgan Stanley saying this: there are many concerns that Trump 2.0 might lead to a higher deficit, which is ultimately inflationary and could lead to higher yields. This is a risk consideration in markets and is the reason bond yields rose after Trump won the race. From an equity market perspective, we should think about where Trump may be spending as where he may be cutting. Jim joins us now. Well, Jim, let's start there. Where is he spending, and where do you think he's going to cut?
Well, thank you for having me on your show this morning. So, look, I mean, it's pretty clear that Trump wants to build a better infrastructure, better energy. I think a lot of those segments of the of the market can actually do relatively well. And where he may start to cut is it's really no specific place, but it's really more of that broad base, Department of Government efficiency type of a strategy, and trying to see where the wasteful spending actually is. So I don't think it necessarily hits a specific area, but I probably would call out maybe healthcare. Healthcare might be an area that could have some reductions because there are a lot of government overlays that goes into that space that goes to fund, some of the pharmaceutical companies and what have you that are based on government financing. So a lot of this is going to be based on the efficiencies in all of these various sectors, and really keeping an eye on the outlays and the spending and how that money is being spent, as opposed to just setting forth a policy, putting a dollar number next to it, and then just allowing that to get spent without it being monitored.
The fear of that public debt and the growth of it, Jim, post the Fed cut by 50 basis points, and you add in the strength of the American economy, does mean we've moved something like 60 basis points higher on the 10-year yield since that decision. In Greenspan, the Greenspan conundrum was them hiking rates and the long end rate not going up enough. Here we have the opposite of that, Jim, of rate cuts, and for some reason the long end is moving higher. Could we be in a situation where the cost of capital isn't coming down alongside Fed cuts as we go forward? And what does that mean for this economy?
That's exactly right. I always highlight this, and we say when the Fed cuts rates, do interest rates fall? I mean, it's a mechanical thing that we think about, but we kind of take it for granted. So the reality is that there has been a lot of money supply that's been created over the years. So when the Fed starts to cut interest rates, that money supply is still in the market. Also, if we believe that there is an inflation impulse to higher deficits, bigger balance sheets, and things of that nature, then the Fed may not cut as much. Now, remember where we were. After the September FOMC meeting, the market's priced in that the Fed funds rate was going to 3%. Today, the market's pricing in maybe 3.5%, a little over 3.5%. So there's been a 50 basis point adjustment. And that 50 basis point adjustment in rate expectations from the Fed has translated into the front end of yield curves and is quite naturally flattened the curve. So ultimately what we need to see is where that terminal policy rate is. Now, I'm of the opinion that the terminal policy rate is going to likely be somewhere between 3.5% and 4%. So I'm higher than maybe what the Fed is saying, definitely higher than what the market is expecting. So 4%, 3.75%. So that would suggest that yields can come down, but they're not going to come down materially from here. But then the next question is will they go up? And unless the Fed switches policy and starts to reverse gears, or we have a big inflation impulse, I also don't think that yields are going to go up quite a bit. So I think it's going to be hard for 10-year treasuries to materially rise above 4.5 or 4.6% for any period of time, unless the Fed reduces reduces their policies. And essentially what I'm saying is that we're going to have a more broad-based range in interest rates.
Well, that in itself, Jim, just highlights how the broad distribution, how the tails under Trump presidency and the kind of fiscal policy we could get are just really fat and wide, those tails, especially because we don't have any good economic models for what adding $7.75 trillion of debt to the economy would do. What does that mean for the place of bonds in your portfolio in 2025 with that possibility of wide outcomes and higher volatility?
So again, a fantastic point here. So the way that we look at this is that we are perpetually underweight duration. So typically when people say that they're getting towards neutral, they typically get to index level duration in the bond market, which is about 6 years. So for us, the new neutral is to own less duration, therefore to own less bonds. And effectively, our neutral level for duration is somewhere closer to 4.5 or 5 years. So we're a full year shorter, year and a half shorter than what the index might say. So ultimately, what we're saying is that our ability or willingness to buy long-term bonds is less. We're happy to own high-quality, short-term fixed income, and that's where we're going to set it up. Now, the other thing that happens here is that when you get this higher inflation and when we're talking about this duration risk in the markets, you tend to get bond returns correlating very highly with equity returns, which means that bonds don't necessarily hedge equities in the way that they used to do. So therefore, the market, the portfolio becomes riskier because you don't have bonds as that natural offset and that natural hedge. So we have to be very careful and selective and be very actively managed in the bond space as opposed to passive. So it's a change in style, and it's also a change in structure of our overall duration. Less duration, more active management is the way that we're dealing with this right now.
Jim, good morning. If you're reluctant on duration within the bond space, does that carry over into the growth narrative within the equity space, particularly in the Mag 7? And you talk about a mispricing, perhaps, in some of the earnings. I think yesterday our guest from Wells Fargo said he doesn't expect a crash in sort of Mag 7 mega tech, but you've got to reach further and wider into better value in the Russell, into small caps, et cetera.
Yeah, so effectively what we're looking at is more of a broadening out of the markets. So the Mag 7 is, has done very, very well. That's really largely represented the beta of the marketplace. So think of it as a PE multiple expansion. Is it more about the P than the E? Then it's a beta type of a move, and that's the Mag 7, and that's the large cap, and that's tech, and that's growth. But if it becomes more about earnings are not evenly distributed throughout the S&P 500. You can get earnings in mid cap, you can get earnings in small cap, and also in large cap. So what I'm saying is that going forward, the lines are going to be blurred between large versus small, growth versus value, tech versus non-tech, and things like that. So it's really about, again, moving more towards that active management on the equity side, thinking about where the earnings growth rates are, all the factors of cash flow, free cash flow yields, margins, pricing power, all of these quality factors that can come from different parts of the market. Now, man, there's one risk here, though. The trade that has worked really, really well is that growth in tech space. So yes, it is the Mag 7 that has good earnings upgrades, and a lot of momentum. So we do have to be a bit careful when we step off a train that's been working really, really well for a long period of time, and we have to slowly start to think about reallocating into the broader markets. And I think that's where some of Trump's deregulation policies can actually help, because I think it would have a better impact on the broader markets more so than just the Mag 7.
When it comes to that deregulation trade, I mean, the idea is that it's going to be within financials, it's going to be within energy. I mean, that's the classic kind of thing that's come into our inbox. To a certain extent, part of that has already been delivered by those two sectors. We really need to know a lot more detail on what deregulation really means for equities.
Yeah, no, and that's a really good point. And the way that I think about this is what they say in the government is that people are policy. So yes, the immediate impact is in places like financials, and we're going to see that very, very rapidly. But we're also going to see it in the energy sector with permitting. We're going to see it across the FDA. We're going to see it across, various other construction, industrial material sectors, transportation. I highlighted energy, liquid natural gas, all of these other places. We're just going to have different people doing the regulation. So it's not so much about undoing all the regulations. It's just about having different people enforce those regulations, and the interpretation of those regulations might become more business friendly as well. So this is really what we're thinking about that's much more broad based. And the market is picking this up. The market's figuring this out. Market's saying that it's not just about those specific sectors, because it has been a more broader rally since, Trump had pulled ahead in the polls and ultimately won the presidency.
He's definitely been talking about pro-growth policies, but can we have robust growth? We have CPI tomorrow that is not inflationary.
That is the key. That's productivity, right? So high productivity means that you have good growth with low inflation, and we can go from there. So ultimately, that's the solution of what we want. The typical Keynesian way of looking at this is that if you have high growth, you have high inflation. But we're also not accounting for the fact that there could be more business investment. Don't forget, regulation costs a lot. That's a drag on production. That's a drag on profits and also returns. So if you have a combination of smart deregulation, and you also have a reasonable economic environment, reasonable economic climate, and with all the fiscal stimulus that's, by the way, still in the marketplace right now, if you start to deregulate, that money gets to be put towards more productive use. So in theory, yes, you could have more growth with less inflation. That's actually what happened in Trump 1.0 when he was president, when he got elected in 2016. You had a rise in productivity, rise in business investment, because a lot of cash was freed up due to deregulation, and a lot of time and energy that's spent on regulation was freed up to go into business investment, and you can potentially have it. This I think is underappreciated by the market, because it just is a very hard thing to quantify in a specific number.
Jim, we thank you for your time this morning. Jim Caron of Morgan Stanley. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Hackis. Hey, Yahira.
Hi, Anne-Marie. Democrat Ruben Gallego defeating Republican Carrie Lake in the Arizona Senate race, according to the Associated Press. The win is a bright spot for Democrats after Republicans regain control of the chamber. Gallego will succeed retiring Senator Kyrsten Sinema, who was elected as a Democrat before changing her party affiliation to independent. Though Gallego pulled well ahead of Lake in the entire campaign, in the end, the results were much closer than predicted, another sign of Republican strength throughout the country. Meanwhile, Southwest Airlines offered voluntary departure packages or extended leave to airport workers in 18 cities in an attempt to curb overstaffing. Those who accept the packages will permanently leave the company at the end of the year. This comes as aircraft delivery delays force Southwest to cut its flying plans, and those delays are due to troubles over at Boeing. And OPEC cut its forecast for oil demand growth for the fourth consecutive month and lowered its projection for next year. The move recognizes a slowdown in demand by top oil consumer China. OPEC has scaled back this year's growth projections by almost a fifth since July. Led by Saudi Arabia, OPEC and its allies have twice delayed the restart of production. Modest monthly increases are due to start early next year, but will first need to be reviewed at a meeting in December. That's your Bloomberg Brief. Anne-Marie.
Thanks, Yahira. Up next on the program, bracing for Trump's immigration policy.
With an unemployment rate close to 4% and a population that's aging and all the workers basically not really returning to the labor market, it's not clear at all who is going to be producing that increased output.
If personnel means policy, that conversation coming up next. You're watching Bloomberg Surveillance.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning. Equity markets this morning a little bit softer, but still the Trump trade continues. You see a number of members of Wall Street managed just saying, look, we're actually going to be higher. We're not ending the year on 6,000. Ed Yardeni saying 6,100, even though we're a little bit softer today. Bond market back open, though, and yields up nearly 6 basis points.
Yeah, we just had a conversation with Goldman Sachs where Christian Giller-Glissman called it a weird market, but they're ready to write out of the money calls on this market and, as it were, buy at the money calls. So they think there's potentially another 10% up in this market. Julian Emanuel says this is a market in its infancy, but then we've got to look at positioning. And Bank of America say the positioning is at an 11-year high. So yes, you can make the argument that exposure at an 11-year high is a little bit stretched. But if you believe in the following, okay, and I'm told that you should, which is tax cuts, you get a tax cut, you get a tax cut, everybody gets a tax cut. We get, all right, a tariff war, and that has implications for the Fed. So maybe some temperance in the rate cuts, but we get growth, Anne-Marie, and growth in earnings. And if that is the situation, then an 11-year high in positioning is not necessarily stretched.
Well, personnel is going to mean policy when it comes to Trump 2.0, and that's what we're going to discuss right now. Under surveillance this morning, bracing for Trump's immigration policy.
If you put tariffs at the same time as you limit immigration flows, it's not clear where the workers are coming from. With an unemployment rate at close to 4%, basically with the labor market at full employment, and a population that's aging, and all the workers basically not really returning to the labor market, it's not clear at all who is going to be producing that increased output.
Here's the latest. President-elect Donald Trump tapping Stephen Miller to serve as Deputy Chief of Staff. CNN reporting Trump has also picked South Dakota Governor Kristi Noem to lead the Homeland Security Department. Terry Haynes of Pangea Policy writing Trump's appointment of Stephen Miller as White House Deputy Chief of Staff is at first blush a small markets negative. It raises the potential that staff fights create a situation where Trump's White House loses focus on implementing and executing on markets positive policies. Terry joins us now. So Terry, when you say personnel is policy, based off everything we're hearing out of Mar-a-Lago, what do you think the makeup of Trump 2.0 is going to be?
Well, the short answer is we're not sure yet. But what I would say is this: if you're looking at a second term with a presidential victory, with a tiny House majority and a small Senate majority, broadly speaking, the same as Biden's first 2 years. In context, what you have to look at is, and a lame duck president. What you have to do is maximize your focus on things that are your top priorities, vectored with what's popular first. Secondly, you need to make sure and relentlessly focus on the time left in the administration so that you're pushing that policy forward to success. And thirdly, don't bother with rearranging the deck chairs on the Titanic and a lot of worry about the technicalities of stuff. Just push forward with your most popular things that are your top priorities and move forward.
So far, though, does this not just say to you that this is a hawkish immigration stance and a hawkish stance on China?
Well, sure, neither of which are surprises, and both of which are meant to be correctives to much, in their view, in the view, I think, of much of the public, a much wafflier Biden policy. So they will focus on those as priorities, and they should, probably.
Terry, good morning to you. Anne-Marie and I were just chatting along with Danny in the break there, and the question becomes, as the construct of this Congress changes, who's going to be the equivalent of Joe Manchin?
Oh, there are a lot of those people. The first two that come to mind are Susan Collins of Maine, Lisa Murkowski of Alaska, but there are others. You know, I've long said, you know, it's a mistake to think of the United States Senate as some unitary body. You're looking at 100 CEOs who are who are making their own decisions in their own interests, and that you need to, you know, to herd and coalesce in order to get political decisions. It's a consensus body, and consensus is difficult to find. So you need to find those people. But you know, anybody that's anybody that thinks that this is going to operate on the UK model and people fall in under party lines without regard to their own self-interest is, I think, misunderstanding politicians in the United States.
Then that has a direct impact on the evolution of our understanding of tariff, tax, and fiscal policy, because it's not, you know, one team, one dream with no dissent, as you say. So perhaps there is a form of guardrail around the most extreme fiscal, the most extreme tax, and perhaps the most extreme policy.
Well, fiscal's been, fiscal in particular, gets decided much more by the Congress. Most policies get decided, in the specifics of them, which markets care about, get decided much more by and in the Congress than in the executive. I think that's not understood. You know, but I was writing on Sunday, and a lot of people have been picking up since. You all discussed it in your last hour. That, you know, the shape of the tax cuts and the size of the tax cuts have to do with what the appetite is for increasing deficit, and if so, how much. You know, last time around, that was $1.5 trillion over 10 years, which sounds like a lot, but when you break it down per year, that was deemed to be an acceptable rise. And this time out, I don't know. I mean, you're going to get a very interesting debate before you ever get to the tax cuts with debt ceiling, debt limit, about what the appetite is, and frankly, what the market reaction to an increase in the deficit is.
Well, the House certainly wants to move a bill within the first 100 days that addresses some of these things. Terry, do you understand the makeup of Congress as it stands at this moment between supply-side conservatives and populists, and where those party lines will fall in ability to agree to what the deficit should actually look like? What, as the Wall Street Journal comes it, is the number that they can agree on?
Oh, I have no idea what the number is, and as I say, I think that depends on, and anybody that says so is not telling you the truth. But you know, they took until about May of 2017 before there was an agreement among Republicans in the Senate about what that number would be, and the Senate, I think, drives this train this time. You know, the House's job is fundamentally in a Congress in a Washington like this is to stay together as much as possible. Frankly, number one. Number two, overshoot. What the House does is always on policy is designed to be too much, with the idea that the Senate brings it back into line, into more of a consensus product. And, you know, that's what they'll do this time. But, you know, my advice to markets is watch the Senate on this, not the House.
Well, speaking of the Senate, Terry, I got 30 seconds. Who's the name you'd put money on when it comes to the majority leader?
Oh, you know, I'd say either Cornyn or Thune. The Scott thing to me is a kind of a last-minute insurgency, and I don't think, you know, I don't think succeeds. This is a secret ballot, which will tell you everything you need to know. Plus, I think Scott, in his attacks on McConnell and his underwhelming performance at the NRSC the last time, is not beloved by his colleagues.
So it sounds like it's going to be a John. Terry Haynes, thank you so much for joining us this morning. Terry Haynes of Pangea Policy. Coming up next, Bob Diamond of Atlas Merchant Capital, of course, former CEO of Barclays, on the outlook for financials during Trump 2.0. You're watching Bloomberg Surveillance this morning on Bloomberg TV.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance. John and Lisa are off today. I'm joined alongside the table with Danny Berger and Manus Cranny. As we had another record high yesterday, the S&P 500 hovering near the 6,000 mark. Yeah, we're a little bit softer today, but as Danny keeps reminding us, all the Wall Street notes keep coming out, and they're doubling down on this Trump trade, maybe just taking a little bit of money. The bond market back open for business today after being off for Veterans Day yesterday, and we're seeing yields, Danny, across the curve go higher, especially on 2s and 10s.
There's a huge hesitancy around duration. We were talking with Jim Karen of Morgan Stanley earlier in the hour, who basically said you need to be underweight duration. We've heard this over and over again. Citi, JP Morgan also think that you should be neutral. The concern is whether or not investors are going to be willing to continue to fund the fiscal deficits that America is racking up, especially at a time that you have foreign central banks less willing to buy bonds, you have the Fed doing QT, you now have a situation where there are more price-sensitive buyers. Does this mean we'll see something that looks like a failed auction? Whatever it means, it does mean yields higher, at least for now, even with the Fed that's cutting.
And the dollar moving higher, supported by higher U.S. yields, Manus. At some point, I know you spoke to Kit Jukes this morning, will we actually see parity on euro-dollar?
Look, he believes that the political chaos, the tariff potential, and the ECB, the trifecta, it's almost like the horsemen of the apocalypse coming towards the euro. There's an inevitability. You break 105 and you trade down to around parity. But Kit was at pains to say that he thinks that the dollar exuberance and that high will come fast and furious before Christmas, and that's when he thinks you're possibly going to see the dollar peak out. And I sort of pushed him on why you think that is, and he said he thinks the most extreme version of policy on the dollar is not going to be reflective of 1985, which was, of course, the Plaza Accord. There may well be, I loved what you said, Anne-Marie, there may well be a Mar-a-Lago Accord, but right now he doesn't think the extremes of those dollar policies, those trade initiatives and dollar policies from the 1980s will be brought to bear.
And we're getting a lot of tea leaves and some reporting about how President Trump is going to govern in Trump 2.0. Under surveillance this morning, Trump adding to his list of cabinet picks. He's expected to tap Florida Senator Marco Rubio for Secretary of State after naming former New York Congressman Lee Zeldin to lead the EPA. And according to CNN, South Dakota Governor Kristi Noem is the pick for Secretary of Homeland Security. So two things come to mind when I look at these makeup of people. One, hawkish stance when it comes to China. And then when you look at some of the individuals that are maybe the border czar or the deputy chief of staff like Stephen Miller, very hawkish when it comes to immigration.
Yeah, very hard line on immigration. And as Ed Mills brought up earlier in the show, does this suggest where Trump's priority is? It is a Wall Street right now that is ecstatic about the idea that the priority of both Trump and Congress will be deregulation and tax cuts. If what we're seeing so far is really concentrated on China hawks and immigration hardliners, Is that where the focus is? Will the street be disappointed, Anne-Marie? I think to really understand where this goes and where the priority is, we have to hear who the Treasury pick is.
Oh, absolutely. Treasury pick and also Director of National Economic Council. They're going to have a lot of sway in how the president views the economy, especially operating out of the West Wing. Axios this morning reporting that Israeli Minister of Strategic Affairs, Ron Dermer, met with Donald Trump at Mar-a-Lago on Sunday. An Israeli source saying Dermer shared messages from Benjamin Netanyahu on Israel's plans in Gaza, Lebanon, and Iran over the next 2 months ahead of Trump's inauguration. Manis, you and I both know that there's been a number of phone calls as well with President-elect Trump and Bibi Netanyahu regarding Iran and how those two view Tehran.
Yeah, and if you think Marco Rubio potentially as Secretary of State, you know, he is not just a China hawk, but he is also an Iran hawk. But he has actually championed maintaining NATO alliances. So it's not all directly negative there. And I think there's a wonderful line from Politico this morning which says, in regards to Rubio, which is, that sign that you hear is a tiny sigh of relief. But there's no doubt about it. It's about a recalibration of what is to be done with Iran. And there was a gathering in Saudi Arabia over the past couple of days about trying to build more of a reconciliation, because, of course, the dial has shifted in Qatar in terms of their negotiating position and stance in this discussion for ceasefire.
And we also know Congressman Mike Waltz, a Green Beret.
Yep.
He will be an individual that Trump is tapping very close to him. It's going to be his national security advisor. These two men are stalwarts when it comes to protecting Israel. They're very hawkish, to your point as well, in Iran. And Netanyahu had come out and said him and Trump see eye to eye when it comes to Tehran. And what I'm hearing is that the sanctions are on the table, and this administration, when they get into power, wants to enforce them. In the corporate sector, Home Depot this morning lifting its forecast for the year after normalizing weather led to strong sales for seasonal goods and demand for outdoor projects. The company also noting impacts of economic uncertainty, hurricanes, and many U.S. consumers postponing home buying and larger scale projects. Danny, you said this earlier, and I thought it was interesting. Everyone was coming on the program saying consumers, big businesses, they're all putting off big purchases until after the U.S. election. So, I don't know, we off to the races now because we know the outcome?
Well, it's not like in Home Depot earnings. I mean, maybe it's there. I haven't seen it, saying that all of a sudden over the past week there's been an uptick in interest because we know who's president. The problem from Home Depot, and especially those exposed to the housing market, is that even though you have a Trump presidency, even though you had the Fed cutting by 50 basis points, and again 25 basis points, is that rates have been moving higher. 30-year fixed mortgages have continued to truck higher, above 7%. What does that do to psychology of consumers that we're waiting to get home purchases with these event risks off the table, and still you don't have the ability to do it? So sure, Home Depot outperforms, but Anne-Marie, at the moment it looks like a lot of that is due to weather and hurricanes because things needed to be built and replaced. It doesn't suggest long-term success for the company, at least for this moment.
Look, the other two facets, first of all, I didn't help Home Depot personally. I didn't actually get down there. There's a huge one around the corner from here, so no Home Depot for me, but asking other people to help me is there. Look, this is a company with debt, a debt-to-EBITDA ratio of around 2.5 times. Can they pay down the debt? That's going to help them on the stock equity valuation side. But Danny, to your point, which is mortgages are still expensive. If you're not on the mortgage ladder, do you want to take on a mortgage at 7%? It's about the remortgaging market, and we did see a flurry of that in September to the highest level since 2022. But that was, Danny, when we came back down on the rates. And I think for as long as we're in this cutting cycle, there is every opportunity for the remortgaging market to really help you, because that's actually typically how you remodel your home.
I ask this question to myself every day. Do you want to take out a mortgage at 7%? So far, I'm a little bit unsure. All right, financials continue to get a boost from the president-elect's win as investors price in what the Trump trade will look like in 2025. Bob Diamond of Atlas Merchant Capital writing, it's in no one's interest to make the big banks even bigger. We need a vibrant banking sector with regional and specialist institutions that serve small businesses and customers around the country. Pleased to say Bob joins us now, former CEO as well of Barclays. We all know you from our days in London. Thank you for joining us around the table. So what are you expecting in terms of this sector with a new regime in Washington?
Listen, I think it's pretty clear that this administration will be less aggressive on regulation. I think for the big banks, we'll continue to see strong performance. As you just read from my quote, I think the banks, since 2008, when the theme was too big to fail, this won't happen again, the largest 4 banks in the U.S. are bigger. They're more concentrated. They have far more systemic risk if something went on. in our view, the great investment right now isn't just the big banks. And by the way, I think they're going to do absolutely fine. But it's the 4,500 regional and community banks where we think we're going to see consolidation. I think we need consolidation, but more importantly, we need this sector. The service that the regional and community banks provide for small businesses, middle market businesses, family offices, family businesses is much better than the larger banks. I think it's one of the pillars of why the U.S. economy keeps, as healthy and as strong as it is, that it has such a diverse financial services industry. So we do think there'll be consolidation, and we think it's necessary because many of the smaller community banks are frankly too small to succeed. So for us, invest in those really strong regional banks, give them the capital to beef up the capital ratios, whether it's the loan portfolio or the interest rate portfolio, and most importantly, give them guidance, give them the capital so that they can acquire the community banks that are too small to succeed and get the synergies of technology costs, the online type of costs, and all the regulatory costs associated with this.
Bob, if I can pick on one thing you said, because it's a little bit different than the conversation that's been happening over the past few years. The conversation had been where you see some of the risk is the regional banks because they haven't right-sized their rate exposure. You said with the big getting bigger, they have more systematic risk within them right now. What is that risk exactly?
I think it's what the regulators faced in 2008 when banks were so large and it's hard for anyone to imagine today the banks are so healthy and frankly they are pretty safe. They're becoming more utility-like. But if in fact there was a crisis, then the systemic risk of the larger banks is significant. Now, I think more importantly, Danny, is the competition from strong regional banks who are providing the kind of service I talked about, and the competition that they will provide for the big four banks is really good for the economy and really good for customers.
One of the arguments that the banks has left systemic risk is that a lot of the risk is now off their balance sheet and private capital has essentially swallowed that up. And that's where a lot of the riskier loans lay. If we're in an environment with deregulation, do those trends reverse? Do banks start taking on more risk? Does private capital cease the astronomical growth that it's had?
Listen, I think it's not debatable. The banks are larger, they are more concentrated, and if they're the big four, and so they're becoming more like utilities, safer in many ways. But if there were a crisis, being larger and more concentrated is going to create more systemic risk. So I think allowing the growth of the regional banks and the community banks outside of the large banks is really good for the economy.
Look, you've run a major international bank in your time. You're steeped in this business. One of the salivating propositions to the market here in the United States of America is a lighter capital touch and a softer endgame with Basel III. You've been a CEO, so what is it that moves the needle for the CEOs of the street in terms of capital deregulation?
Listen, it's been very beneficial to the U.S. banks. Manus, you and I have seen this. The UK banks are the opposite extreme. The regulators in the UK have been very aggressive on higher capital levels, very aggressive on not allowing risk or development or growth of businesses. And where are the UK banks now relative to the US banks? Nowhere near. Very low price to book. Very little operations outside the UK. Even my former bank, Barclays, who had the benefit of the Lehman acquisition, has not driven that investment banking business. Given the quality of what they have, they just have not been as aggressive versus the U.S. bulge bracket banks and are paling in comparison. So I do think that the U.S. banks are benefiting from a much lighter touch on regulation, and we see it in the results. Now, I will say, I think it was about 5 or 6 months ago when I was on the show, I think my comment on European banks is I'm becoming less bearish. I couldn't quite say I'm bullish.
Did you phone Andrea Orcel and say get your hands in Commerzbank?
Yeah, but we're starting to see it. Well, whether it's UniCredit and what I think is a very thoughtful approach to Commerzbank, could we see a real cross-border merger? I think that would be
Will the Germans allow it?
I think they will. I think this is a different Germany than we've seen over the last 10 or 15 or 25 years since the introduction of the single currency. They're not, they're not really making all the decisions for Europe around banks today. And I have a feeling that this is going to go through and be pretty positive.
Okay, so cross-border in Europe. Let's spring forward. I can hear Sergio Monti howling at the TV at the moment, going, the landscape's getting even more unfair for the Europeans relative to Wall Street. But let's just cast our view forward. What, in terms of M&A, I hear from the regional bank, but what about a global M&A bank deal? Is that something that's still not really fit for this landscape, Bob?
Well, I think here's
whether that's Europe to the US or US into Europe, which I think is much less likely.
Here's the rub. I think for bank CEOs, one of the lessons learned in 2008 is that retail banking is a local regional business, and investment banking and asset management and wealth management are global businesses. So absolutely, you're going to see continued growth of the international footprint of the US and European banks in investment banking, in wealth management, in asset management, but I think there's no appetite for a global retail banking operation.
When it comes to some of those regional banks in the United States, are you concerned about the failures we saw last year? And then you have the IMF, Fitch coming out and saying, actually, there is a little bit of concern what's underlying some of these regional banks when it comes to the commercial real estate.
I think I said at the time that the failure of SVB and the failure of First Republic, they were behind us. And I think that the strength of many of these banks, do they need more capital? For sure. Every bank has their treasury portfolio a little bit upside down when rates go from 0 to 5.5%. I think every bank has some issues in the loan portfolio for the same reason. And certainly as an investor, one would stay away from the banks that have a higher percentage of commercial real estate in their loan portfolio. But that's something that can be seen during due diligence. And I see absolutely no crisis brewing out there. I see a much more positive outlook, which is that this is a sector that is absolutely ripe for consolidation, positive consolidation. And my worry is that the noises coming out of the SEC prior to this were a little bit concerned about, do we really want this consolidation? I think it's really, really important for our economy. I think it's really important for these banks. I think the service they're providing is good. And I think this is a really positive case for consolidation. And I think we're going to see more of a positive attitude toward that with this administration.
Let's take one for the street. As an Irishman who's an immigrant, Dodd-Frank, whether it gets changed in terms of the remuneration, do you think that this banner headline of deregulation will incorporate some kind of alteration to the banker bonuses?
Gosh, I haven't heard that word Dodd-Frank in so long. It gave me a little bit of a
Don't worry,
shiver.
I'm not going to ask you what's on the
Volcker
top
rule,
page.
is that coming back
No,
as well?
I'm not, don't worry, I'm not going down there. It's about the restructuring of the bonus remuneration out there on the street, isn't it?
Well, I don't see much pressure on that in the U.S. I actually see that pressure easing significantly in Europe and the U.K. And listen, we all saw it in 2008. The U.S. took a very practical approach with TARP, re-equitize the banks, force them to clean up their balance sheets, and then allow them to grow constructively. In Europe, it was a bit more of biblical justice. It was get those bankers and get those banks at the risk of the economies. And we saw it certainly in Ireland for quite a while. I think that's changed. I think the caps on bonuses have even come off to a large degree in the UK just recently. So I think it's moving in a much more healthy direction.
Bob, this was fantastic. Thank you so much for your time this morning. Of course, Bob Diamond of Atlas Merchant Capital, the former CEO of Barclays. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Hackis. Hey, Yahira.
Hi, Anne-Marie. Donald Trump's return to the White House could see the return of bond vigilantes. That's according to famed economist Nouriel Roubini. In an exclusive conversation with Bloomberg at the UBS Australasia conference in Sydney, Roubini discussed what may happen if Treasury yields surge under Trump.
He cares about market discipline, and if bond yields go higher and the stock market correct, that's a bond vigilantes in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate.
Roubini went on to say that investors are still trying to game plan the scope of Trump's second-term policies. Meanwhile, Bitcoin's record-breaking rally continues. Just a few hours ago, it got within striking distance of $90,000. Now it's trading just under $87,000. The currency is lifting the overall crypto market above its pandemic-era peak as traders bet on a boom under President-elect Donald Trump's administration. Plus, with the Republican Party tightening its grip on Congress, that's boosting optimism that the president-elect's crypto-friendly policies will be pushed through. And in sports, the Miami Dolphins held off the LA Rams on Monday Night Football to win their first game in over a month. Tyreek Hill caught a short touchdown pass in the third quarter to end the longest scoring drought of his career. The Miami defense racked up 4 sacks and 2 turnovers and kept the Rams out of the end zone. Elsewhere, the Cleveland Cavs' historic start to the year is not slowing down. Last night's win in Chicago lifted Cleveland to 12-0 to start the season, becoming the first NBA team to do so since the 2015 Warriors. That's your Bloomberg Brief. Anne-Marie?
Yahira, thank you so much. Up next on the program, consumer momentum.
The consumer is interesting because the consumer does seem a little stretched here. Obviously, we've had a great expansion. We've had a phenomenal bull market, so we have somewhat of a wealth effect.
That conversation coming up next. You're watching Bloomberg Surveillance.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Good morning. Under surveillance this morning, consumer momentum.
The consumer is interesting because the consumer does seem a little stretched here. Obviously, we've had a great expansion. We've had a phenomenal bull market, so we have somewhat of a wealth effect. Imported consumer goods are going to be one of the places that get targeted. So, without seeing things necessarily, put it this way, even if the consumer's strong, a retailer might be under margin pressure. So I think it's one of those places I think you have to watch and wait.
Here's the latest. Another batch of consumer data due this week, with CPI tomorrow and retail sales on Friday. According to Bank of America's new consumer checkpoint, the consumer shows solid momentum as we head into the holidays. The 2024 Bank of America Holiday Survey suggests people are planning to spend $2,100 outside of typical obligations and necessities this holiday season. That's up 7% year over year. Joining us now, David Tinsley of Bank of America Institute. David, thanks so much for joining us. Read through your report. So let me just get this straight. Are you seeing any signs at all of a consumer that is slowing down?
Yeah, I would tend to take issue with the interview you were just showing there, saying that the consumer looks stretched and is potentially slowing. I mean, in our data, what we're seeing is that our credit and debit card data was up 1% year on year in October. And that's a pretty good number for this data series. And then, of course, if you overlay that with the, I think, 4 months in a row rise in consumer sentiment in the Michigan survey, and then when you look in our data again at what's going on in terms of wages going into people's bank accounts, the year-on-year growth there, I think, is around 2% or so across all income cohorts. So it's not obvious, I don't think, to us that the consumer is slowing. I think we would characterize the situation as continued forward momentum.
David, Anne-Marie and I have been talking about all morning, different companies saying, look, consumers are putting off big ticket purchases until they know the outcome of this American election. Did you see the same pattern in some of the spending, that there's going to be some form of financial firepower unleashed now with the election behind us?
You know, that's an interesting question. So in last month's checkpoint, we did note that we saw some consumer durable purchases, so big ticket items, some slowdown there. So it could be that there is some pent-up consumer demand in those sorts of areas. But overall, the position is not a bad one in any case. I mean, what we do see in our data, and I think this speaks to the kind of differential corporate experience, is that the consumer continues to be valuing experiences over goods. So in other words, it's meals out, lodging, airfares, those kind of things are the items of particular strength, more so than on the goods side. So I think that explains some of the differential corporate kind of news flow on this.
David Tinsley, we thank you so much for your time. David Tinsley of Bank of America Institute on the health of the consumer. What I found interesting, actually, is I think this holiday season, there's 5 less days than you normally would see for the holiday cycle. And I wonder if that means potentially there's going to be a little bit less of those Christmas shopping and that spending.
That's an interesting point, and reminds me maybe I need to do mine. But for the retailers, they've pulled everything forward. They were scared of strikes. They were scared of weather. They were also scared of elections and tariffs. So they have these stockpiles, and maybe they're more ready than usual for that sped up calendar.
UBS's Paul Donovan always calls it the hedonism of the U.S. consumer.
You watch our show?
Yes, I do. He's always on. Coming up in the program, Richard Bernstein of Richard Bernstein Advisors, former New York Fed President Bill Dudley, and Sonia Meskin of UBS. That's all coming up next. You're watching Bloomberg Surveillance.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people in the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency. The other penny was lower G&A, blah, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every